Okay, so how are you all doing today? I can see quite a few people joined already. Let me know if you guys can hear me properly or not. It's like almost 7 a.m. in the morning here in Australia, and very soon you will hear some of the alarm clocks are buzzing in my room. However, I want to share a few things with you guys, because this is the week where we are not actually willing to take a lot of trades, or at least trying to avoid the trades for a few days. Because as you can see, Monday, yes, I had nothing, no news, nothing. That's why I was willing to trade on Monday. On the Tuesday we have PMI, okay, then job openings. Wednesday we have the non-farm payroll change, that's the employment change. Okay, so ADP, I don't think this is the exact payroll, because the payroll is somewhere here, non-farm payroll or something somewhere here. I think it is the same, non-farm employment change. So the whole week has lots of, I have only selected the US dollar, the red folder, and the medium impact or orange folder or something. Okay, these are the only things that I have selected recently. Now because of all these events, I'm not willing to trade. There is a problem with this Forex Factory website, because as you can see, the time zone I have selected -5. Yes, there is nothing on Monday, but it shouldn't be locating at the Tuesday's PMI from now, okay, because it's not Tuesday in New York yet. So that's a very big problem for me, because sometimes these things doesn't align properly. I mean, yes, when it is Tuesday 10 a.m. on New York, there will be very good newses or like moves on the market because of these newses. But usually this thing, since I have set it to the New York time and today is Monday on New York, I don't expect price to give me any sort of move today. Now I have traded so many times today. I sell short, I took profit partial on this low, as you can see on this low. Why partial on this low? Because of the lots that I have traded. How many here? 2 and 1, 3. So I closed one over here and then the rest of the 2 at this low. Okay, little lower than that low, I guess. Yes, the reason behind this is the volume imbalance, if I'm not wrong. Let me check. Yeah, so little above the volume imbalance anyway. So that is where I targeted, because there was another influence or confluence, however you want to say it. You see this 15 minutes fair value and a 15 minutes inversion fair value. That is where I believe that price gonna come back. Now the inversion fair value thing, there will be controversies, so I'm not gonna go to that. Just focus on the fair value gap. Okay, I don't know how many of you are here, so let me know if you can understand what I'm trying to say here is. Now before I go to that, let me show you guys a few things. Let me pull this on over here. I hope you can see it. If not, okay, just a second. You see this winning trades, or the winnings, that is 83.33% win rate. Break even trades 5.56%. What happens is, after taking a partial, I try to move the stop loss to break even. There was the break even trade. Now on the losing trade, I have 11.11%. On this day, okay, on I think this day, let me see if I can see it or not. I don't know if I can see it here, but losing trade, the biggest one, where is it? Okay, hold on. Custom range, then I think from November 10 or something this will be good enough, because I'm trading this account only for 3 days, or like today the 4th day, but I will explain what happened before. 5th, go. Now you can see on this day, this is not all the losing trades or something. Okay, you can see it's $87, it's $100. There are a lot of things. This is P&L history, including all the commissions and other stuff. On this day I had 750 in profit. Okay, I'm gonna show you that as well. Just give me a second. Here it didn't update my this is the top step. Okay, it didn't update today's trade because it's gonna update after I think 10 AM Australian time. It's only 7 AM now, so it's gonna update after 10 AM. But I'm gonna show you what happened. Actually, I showed it to my friend, like I talked about it with my friend as well. However, as you can see, I had $748.90 in profit. Okay, I have this in profit, but end of the day I had this losing, like the P&L, and end of the day it turned into a $1,055 losing trade. Why? Is because I was trading with my tab. Okay, and I was very tired returning from work. I was looking into that. So this is if I'm not wrong, this is Wednesday. So I returned home after work, then like got a very short sleep or something, then I started trading. Okay, so after 750 I wanted to stop for the day because I was tired after 750 profit. But when my trade hit my take profit, I had the stop loss pending order in the market. Since I traded from my tab, I didn't realize that it's pending over there. I felt asleep the whole night. It took me into the trade. It gave me that entire 750 and $1,055 loss, and the daily max loss limit is $1,000, but it's because of the volatility, it goes very quick, right? That's why it, or I think including the fees or something, it gave me this huge loss. So in that day, whatever profit I made, I lost that, and also I lost another $1,055 because I didn't close my pending stop loss, that is a buy stop order, because I was I was executing some sell shorts, some short entries. So in this day, that accidental thing happened with me because I was not anticipating this. The next day I had over $1,400 in profit. As you can see, it's, although it's showing like 7 trades, but it's like every time it hits your take profit or stop loss, it counts as a trade. However, whatever trade I took, 100% win rate. On December 1st I made $1,266. It's showing 5 wins 1 loss. Maybe that was the case, I cannot remember, but since it's here, 83% win rate. Here you can see it's a messed up thing because the last trade I had to, like, it closed automatically, and maybe there was a small losing trade as well in between. That's why I tried to stop at this, because overall I think if I didn't hit that stop loss, there could have been around 1,200 or something profit, but forget about that. Whatever it's showing, let's say I have 40% win rate. Next day 100%, this is 83%. But TradeOvet, their dashboard has the perfect thing over here. What is happening over here is, as you can see, my losing day, where is the largest? Here it's showing the largest losing is $1,215, but that largest loss was after taking all the profits that I made before that. Okay, so there goes my friend's alarm clock. I think you can hear it. So yeah, I have a visitor in my apartment. So anyway, that was the losing day. After that I started making profit. As you can see, the profit is now $53,044, which is done with the top step challenge. And this $1,415, this is what I made today. I will show you here as well. So that's the account. Top step new challenge that I was anticipating. Today's PNL $1,415, and the challenge that I have completed. I need 53,000 to complete the challenge. I mean $3,000 in profit to complete the challenge. I have made $44 extra just by targeting here. Although I was anticipating this far, I took the profit at this high, okay, at this level, because that was good enough for me to complete the trade. I didn't need to go for this one. Now why I started this live stream is because I actually have everything saved. If I'm not wrong, let me just go back to my directory where I have saved it. I have every single trade saved over here. For last 4 days, whatever I have done, it's saved over here. But problem is, as I said, I was trading with my tab, as you can see. I think this is the PC that I took today, so let me show you the tab. So this was the trade that I took. It's vertical like this. I didn't realize when phone or tab I'm using, if it's vertical, it's gonna record like vertical. There will be another one here. You see, this is vertical, but this is a paper trade. Don't worry about whatever it is. I was just doing some, like once I'm done with the day, I try to anticipate some levels. At this level, a lot of people took sell short because they found some beautiful setup over there. It was on Friday. So if I'm not wrong, okay, let me just, as you can see, like I'm using the tab, I'm trying to pinch, look for the possible levels, things like that. Anyway, so yeah, this is the problem. And when this afternoon I was trying to record or edit the videos and put all of them together with some added speed or something, I couldn't. So just look why I entered into a long trade over here, okay. And before that, it's like on 15 minutes there is a hourly fair value gap. Just a second. Okay, so yeah, in 15 minutes there was the hourly fair value gap, the bullish fair value price came there, took the liquidity. Although the wicks came below, but you see nothing went lower than that fair value, so it's still respecting that fair value. That's the first thing. Also, it took all the major liquidities from left by that time on that day, and then it started giving the market structure shift. Okay, that's the reason I like, it was a clear setup for me, as simple as that. Anyway, so not about that one, let's talk about today. So first thing first, today I took a sell from here, one sell from here because of the volume imbalance. I was expecting price to come up here, that's where I entered the volume imbalance level, this level. And then when I saw it went to that 5 minutes breakaway gap low, I entered one more time and sell short. First take profit I took at that level, yeah. And the second one, first I targeted here, but then I moved it a little bit lower than that because of the volume imbalance sitting lower, and also the 15 minutes fair value aligning with a 15 minutes bearish inversion. Also there are some 5 minutes fair value as well. So anyway, that was the trade here, but it looks very choppy, sloppy, right? Let me go to NQ. Same thing here, but look at the moves over there. After tapping into this 15 minutes, let me go from there. Okay, bearish fair value gap here. Oh, come on, the rubbish bin collector. Shit, bro, I'm sorry about the noise. Yeah, so what I was saying here is this, the 50% rejection, beautiful rejection from there. Also in 1 minute you will see some beautiful liquidity levels that price took from that area, that I call inducement. Remember the inducement, that is the inducement. Anyway, what I'm saying here is the NQ. Every move it gave, it was very powerful on NQ. Okay, every move. Like in this case you will see me taking longs on the ES. I have taken long over here, but unfortunately it hit my trailed stop loss because I was not expecting market to come lower before taking this liquidity. What happened here is, if I put side by side you will understand. But that was not a loss. Okay, that was, I entered there and I exited at this level. That was like $30-40 worth of profit, something like that. I mean, let me check. So it's 74.25, that's 74.50, so that's like $12 or something profit over there only. But it went there. I was expecting this high. Look on the NQ, that was the high that I was expecting. NQ took at its first move with this move. On second move it even went higher, it went above the new high as well. But here it didn't do that, it didn't take that liquidity, and it didn't even tap into that fair value. So that's why I moved my stop loss higher, because I was doing it side by side. You will see like a lot of things are there, but trust me, I'm not using like, or I'm not trading on NQ. I'm just drawing these levels on NQ to see where the market is actually in terms of ES. Okay, you see this BPR, there is no BPR around this level. Yes, there is this, that aligning with two different fair values, but like this one, let me show you here. Just look how it traded over there. Now I entered not into the BPR, but why I draw the BPR is, when I saw price during this moment, there was a funny thing. Okay, I was trying to write down something on my chart. Okay, so you see this, I will fast forward to where I wrote it. Now the BPR, as you can see, like I didn't even move I moved my stop loss in profit, like trailed. Once I took the partial, I do that, and I have the BPR already drawn over there when market is coming there. Anyway, like you will see me drawing it right now. You see, market came there, I just draw it there because I know that market can trade completely like full of this area. There is a fair value, don't get me wrong, there is a bullish fair value, but I had this one more aligning beautifully with that area. Now I haven't talked about this much, so I'm not gonna talk too much about the regarding the BPR, but look how much I have in profit, 1194. What happened here is, I was trying to write something, I don't know when I removed it actually before the start recording. Okay, here I was looking into something, I didn't realize that by this high I already had my profit. Now you can see I have one sell limit order over there. This was not how I like, there is another sell limit order below that, under that. So there are two orders, as you can see here, two positions over there. What I was writing is, I had the challenge completed there at the high. Just by trying to record it, I missed it. Okay, so I was not actually trying to write it, I was trying to start the screen recording, and by that time I didn't realize that it hit my level and then it came lower. Okay, so that's why, as you can see, I still have $52,773. But what I did was, my original target was at the low of this, like 2 pips or something above. But since I saw like this can provide me the money that I need to complete my challenge, I didn't go for that. Okay, as you can see, like I have $5,298, and now that market is trading, like market has traded the BPR, I moved my stop loss even higher, like the trailing stop loss. Not, I could have put it bit higher than where it is right now, but I wanted to like give the order block some breathing room as well. Now if this is order block, yes, it is the order block. Why I'm saying like why this is the order block, it traded the previous order blocks high here, it took the liquidity, there is a fair value gap, and then market started going up higher from that specific area. Okay, so it has completed all its requirements by then, and by the end I think I had how much, I didn't realize. Okay, 53,044, and I have $1,415 profit on this day. Now if I didn't hit my stop loss on the first day, like the 750 profit that I made and then went to bed with that bloody thing opened over there. Okay, what I was talking about here is, let me go to paper trading, you will understand why I'm saying this. So let's say I'm going for a sell short here. Okay, now if I put like this, it's easier, but on the what it calls, on the paper trading, it doesn't sorry, on the challenge account it doesn't have that area. Now that's a shitty thing that happened over there. So how we put our stop loss is, let's say like I'm gonna put it very close, so that, let me just put the take profit target somewhere here. Okay, so that will be buy limit, since I sold, that's the buy limit order, and I have to put a buy stop order up there as my stop loss. So that is the way I do the market execution. Like if I put market execution, this is how I have to put my stop loss and take profit. Now when market hits my take profit, let me put it very close so that I can get the take profit hit as soon as possible. I hope on the paper trading this will stay as it is here. If not, that is a problem, but let's see. Like what I'm trying to say here, like once it hit my take profit, this position was left open. Okay, and later, like after ages, when market came here, it, come on, just hit my take profit somewhere here. I just wanted to show, so let me sell more so that I can move it even higher. Okay, okay, now look here what happened. I had whatever the stop loss was, it hit that stop loss, the buy limit order that I set as my take profit, now it's sitting here. In this case, it's keeping that buy limit since it hit that sell stop. On my case, it hit the take profit, it left the stop loss over there. That's what I was trying to show here. Anyway, let me close this one. As you can see, it's still here because it's a market limit order, that like it's a limit order that is pending, because price, when price will come here, it will give me that entry like that. I mean, I hope you got my point. So that's how I got my stop loss on the first day. But if I didn't had that accidental thing, on the third day I had like you can see 750, 1417 and 1266. That is where I hit all my take profits. Okay, so yeah, I mean I have a lot to share with you guys, but today I just wanted to make it very short. I don't know if you have any question, you can ask me. Otherwise I will try to make it any short. Now breakaway gap, I have a huge problem with breakaway gap, saying every single fair value, like every first fair value a breakaway gap. I have a problem with that. But okay, let me go to the weekly chart of NQ. Let me clear this on NQ1. Okay, you see I have few things. I was actually trying to show you guys a few things, but let me this is the weekly, right? Okay, why first fair value is very important. Okay, price took some liquidity, but it still has ways to go. However, here is your bullish fair value, that price straight away breakthrough. Also there is your other bullish fair value. Remember about this bullish fair value, and this one I'm gonna show straight away. So market went inside of that area. Okay, remember that one. Now it came lower, it took this liquidity, but where did it come? it come and created relative equal lows over here, okay, and even there are other liquidity levels as well. Now let's see if market can go one more time here, and remember about this high, I'm gonna talk about that high as well. Okay, what happened here is there is your bearish fair value, price went with the wick above that first time, second time, but no body closed above. How far it went? It went until this bearish fair value, okay, I mean bullish, which turned into, it was supposed to be a support for the price, like when price comes here it was supposed to go higher and take the buy side liquidity. Instead it came lower, broke below that, tested the mean threshold or midpoint once, came lower, again it went to that level. By this time, yes, this is not a proper liquidity grab if you talk about this in 1 minute or 2 minutes or even 5 minutes, like lower time frame, but for for a weekly candle, this a small little bounce is a liquidity grab for me, okay. Maybe it's a shallow run or whatever you have to name it, maybe it can be that, but this liquidity level was taken beautifully over here, because when we put our take profit, let's say like our stop loss is here, what do you think? This didn't stop us out? It definitely did. So why this is a shallow run? Yes, people may have a stop loss here or here, for that price needs to go up there first. Anyway, it grabbed the liquidity, it's coming lower, let's see what sort of low it can create. Now you can see there is one fair value, there is two fair value. Let me remove this one, let me remove this one. I don't consider the first one as my breakaway gap. This can be a breakaway gap, okay, this can be a breakaway gap, but why here I'm not looking into this one? Let's see like from where market is retracing. Market came lower, okay, now it didn't tap into the first fair value, it didn't tap into the second fair value. I talked about impulse, if you remember the impulse, this is your impulse, okay, from a move towards the upside, it took some inducement or liquidity, internal liquidity, now it's going for the external liquidity. Where is your external? Here. Now why I'm showing you this is because I am not sure if this was the low or not until I see the retracement. Now market is definitely out of its impulse, okay, it in one pulse it gave you this sort of move, so that's your low. Now as you can see, I have fair value here, I have fair value here, but nothing is aligning with my OTZ. But let's see what the what it calls the midpoint of the premium and discount has to offer. So that's the midpoint, price didn't reach there yet. Oh shit, I just accidentally ended my entire replay mode, or somewhat around this level, damn it. Now price didn't reach that yet, instead it created another low. This impulse is not done with its downwards move. Why I'm saying this is because for some people, yes, this is a fair value gap that market went inside and then started going lower, but how you are going to use this fair value in any time frame, forget this is a weekly or whatever, think about it like where should be your stop loss? You have two huge fair value gaps up there. Where should be your stop loss if you enter into this fair value? Up there, up here, up here, somewhere you have to put your stop loss. Where will be that? And now if that is the low that you are talking about, what is the profit? If you think it gonna go even lower around this area, it didn't, okay, it still didn't go. But if this is your, still it doesn't make any sense to put a huge stop loss and then this must take profit. And also you don't know if price gonna go here or here. it has already taken few of the liquidities from this area. Yes, it created relative equal lows over there with this swing low, but why I'm saying this is because this is under the premium. Okay, this is in discount, you don't want to use this, and the impulse I was talking about, it turned into this far. Why it's this far? Because this was the first impulse. Price didn't trade into anything over here, like not even this fair value. The wick that went up to this far, it doesn't make any sense for the wick to go here and then come lower. Yes, it's closing inside of that fair value, it's respecting that 50%, but you still have so many imbalances sitting over there. Okay, so many. Now your impulse could have been done if it traded with this, if it traded into a premium array. Okay, this is a premium array which is a fair value gap, or at least if it traded until this level, because if I consider that high low higher high, liquidity grab, market structure shift, then this can be your possible breaker block. I'm saying possible because I didn't look into the left where it is coming out from anything, just possible. Still it's close to that premium level, but it's still in discount. Now market structure shift, whatever happened, market came here, the impulse was supposed to go inside of that premium array, it didn't come there, it went even, it created a new low. Now forget about this one because I don't like the third fair value, first second. Why I'm saying first fair value, I have problem saying this as a breakaway gap. I will explain later because today is not the day. I will probably come to another live and then I will explain, but for now this is the lowest price reached before going into that premium array. So that's how far I have the impulse with, and now if this fails to go and do that, that will be bad. Now you can probably say that market took all the liquidity from its left on these swing lows, it's trading into a water block or whatever, however you want to mark these areas. It already took the liquidities from here. Okay, why you are still willing to enter into a fair value around this area or higher? Why you are not thinking that it can possibly go higher? First thing is, every time when there is a internal swing high, I told you all over and over again, this is an inducement. You will see, if you are anticipating a bearish move, why I'm anticipating a bearish move? Because at this level I have nothing on the left. Okay, weekly, this is the beginning of NQ. There is nothing before 1999, there is nothing over there. Market was going high, consistently it was creating higher high, higher low. It traded to a certain level, it has a rejection, it has a rejection block over here. Okay, there is a rejection block. Why I'm saying this is a rejection block? It is a possible rejection block because there is nothing on the left, but it took the liquidity from its recent high. That's why I'm still considering that. Even I can consider this high as my liquidity. So when price came inside of that rejection block area, now there will be a lot of people who like to mark the body only, but block is not a body. Like block means area. Okay, block means area. So the area is from this low to that high. I have problem if anyone marks only body, because anyway I have showed it so many times. I don't care. If you want to learn the proper way, you can learn it, otherwise you can keep it to yourself. Now market needs to trade inside of that body, that's your triggering point, that market can possibly go lower. But in a bullish move like this, how can you expect market to go lower straight from here? What you want to see is market actually respecting that, coming lower. Now market came lower, it gave you market structure shift in maybe this sort of swing lows, but this is the area that I'm gonna like the most. Just a Okay, sorry guys, I had to say goodbye to my friend, that's why. Anyway, so why I'm saying this is because when market came lower, closed lower, yes, this can be your possible entry point, like the closing price, or even better when you saw this sort of displacement happening over there. Now here is your bullish fair value gap. Do you want to enter before market comes lower than that? I don't really think so. Doesn't matter what sort of like this is a weekly, but think about it as any of the time frame that you are willing to trade into. Okay, it can be a 1 minute, it can be 5 minute, 15 minute, doesn't matter. You will find this sort of things in every time frame. I'm just trying to give you something that I have observed over time. Okay, anyway, so when market came lower than this became my inversion fair value. I don't care about the 50% retrace, I don't care about a swing high above that, I don't care about that. I will, if you want to know, I will give you right now where I learned, where I saw it. Now one time seeing this, two times seeing this. Okay, I have so many times watching these things. Let me see ICT, like, okay, here. I hope he doesn't have any music with his video, otherwise I might get copyright strike or something. Here he is going for buy long. He marked it as IFVG. Why IFVG? Price is even, it's trade, it's a bearish fair value gap, it's trading below that. Why it's IFVG? He's taking buy long, marking it as a IFVG inversion. Price is going above that. It's still trading below that fair value. Now look where he puts his IFVG on once again. If I'm not wrong, this is the video where he actually used that thing, but let me just fast forward. Like he entered once again, if I'm not wrong, he entered once again here inside of that area. He marked it as a IFVG even before price closed above. Now what can be the possible reason of that? I have better what it calls better examples. I might have selected the wrong video here, I guess. Let's see here as well. This is a 2 minutes video. I'm just gonna show you a few things. Like, don't get me wrong, I'm not here to teach you guys anything that I haven't talked about. Here, just look at this one. The moment market went above that, he's like this candle, wait for that, there is his IFVG that he is gonna mark. Did he waited for price to come here again, then went up, then come to the upper part, anything like that? He just marked it, took another entry over there, as simple as that. What is IFVG? Like, what does it stand for? Why this is inversion fair value gap? Because this thing here was supposed to act as a support. Market was supposed to come here, respect this area, then go higher. Okay, maybe not this one. Let's mark the other one here that I already showed. Market was supposed to come here, respect this area, go higher. Higher where? Higher to the level that it is coming down from. Here market was coming down from that high. It came here, tried to respect multiple times, finally it broke below. It came with this candles wick, it came to this one, it respected, it again failed to go and take the buy side liquidity. Don't think this is a buy side liquidity, think about it, this is your buy side liquidity. Why I'm saying this? This is not a swing high, there is no swing high over here. There is not a single swing high over there. If you say this is a swing high because there is a lower high on the left, on the right, I didn't teach you guys that way. Okay, I don't know about others. Yes, ICT looks into one candle, but there needs to be some other things as well. There needs to be a fair value gap at that high. This high needs to trade inside of a fair value, or this high needs to have another swing high on the left, another swing high on the right that is lower than this high. How? Let me find some area. I'll show you. Okay, let's say this is a swing high. Okay, there is nothing on the left, but what I can see is there is a swing high over here, there is a swing high over here. So I have one swing high on the left, one swing high on the right that is lower than this swing high. So either it has to be like this if you are talking about one candle, or the swing high that you are looking into, it needs to trade inside of a fair value first, then it may come lower, and then later on market went above that level. Then you can mark this as your swing high and a possible market structure shift or liquidity grab, whatever, like however you want to use that swing high for. Only then you can do that if you are using one candle. I didn't teach you guys one candle. Why I didn't teach you one candle? Because if that is the case, that is how you are looking into a swing high. Okay, let's say this is your swing high. There maybe I was looking into this one, but there is a better example since there is one candle swing high over here. So let's say this is your swing high. You need another swing high on the right, another swing high on the left that is lower than that. What did I teach you guys? Is at least 2 candles worth of swing high. The fractals that I taught you guys on my channel is 2 candles that has lower high than the highest level, or 2 candles that has lower high on the right side as well, like left side 2 candles, right side 2 candles. Only then you can mark it as your fractal swing high. So isn't that thing simplifying the whole concept of what I'm just saying here? Yes, this may be something that ICT did not specifically told, but why I'm using that way? That is because I saw, I observed, I know how it works. It gives me less of the fake breakouts than what the one candle swing high can. Okay, this sort of things can give me. That is why I use that way. So anyway, even if you say this is a swing high for you, this liquidity was not the target for any of this fair value. That's the highest point price went. Price needs to take that liquidity. This is not the liquidity, because this is the order block that market is respecting, price is respecting. The rejection block, remember the week or the part of that rejection block, how you want to use it or utilize it as a order block. So that's also your order block. Okay, if only if it gives me to draw because of that magnet. So that is your order block as well, like use it as a candle. That is your bearish order block. That is why price needs to trade inside of that and then come lower or get rejected from there. Anyway, I'm not gonna say this is your rejection block. I'm just writing it here because I have nothing on the left but this sort of liquidities that market has taken. Okay, that's why. So to become a rejection block, it must need to have some liquidity grab on the left. Okay, it must. I'm teaching you the way I want you guys to know things. Now why I'm saying this, it will be clear very soon when I'm coming to this point. Why I don't consider this as my breakaway gap or this as my entry point if that is not aligning with my OTG. Okay, I'm coming. Whatever happened here, this become your bearish inversion fair value gap. Price came there, took that inducement swing high over there, gave you another break of structure here. Now it's going lower. This is the impulse I was talking about. Market came this far before trading into your premium area, because first impulse was until this. With just one single candle, it didn't do anything over here. If it was a pure consolidation for couple more candles, I could consider that that's the end of impulse. This was the impulse. Okay, the blue sorry, the green candles, this was the impulse, but I'm not looking into this because I'm not bullish. Market gave me a beautiful market structure shift with lots of like what it calls the displacement. It's a beautiful displacement that created fair value as well, and it disrespected not one but two fair value gaps with one single candle. The bullish fair value gaps that disrespected with one single candle. So I'm not looking into bullish mode anymore, I'm looking into bearish. Now this is the highest level market so far came. I want to see either it consolidates or it goes higher. Let's see what happened over here. Now market is definitely out of that pulse, okay, impulse that I was talking about, out of that pulse. What I want to do is I want to mark this fair value and this fair value that is above my premium, or I mean the what it calls the equilibrium, the 50% level, and that is sitting inside the premium. So now to enter into a trade, if I need, I can look for the OTC. Now here is the magic. You see this far of the fair value is below my OTC 0.62 level. Why I'm saying this, guys? This level didn't just disappear or like didn't just appear on ICT or on my own what it calls the Fibonacci retracement level. These are the levels that traders are using and retested, back tested, however you want to say it. These are the levels that's been used for decades, like ages, for ages. That's why these levels are very important, and that's why people says this is the OTC. Now why I'm not considering this one here? It's above my 0.79 level. If the fair value gap is above your 0.79 level, there is a high possibility that market can, if market goes there, market can go for the liquidity as well. Okay, that's why I'm not considering this which is sitting above, but this one is aligning with my OTC inside of my optimal trading zone, or OTE, optimal trade entry. Now you see this far of the fair value is below that. I'm not gonna use, like, it will be here, but when I'm entering, I'm gonna enter at that 6.2 level, as simple as that. That's the use of the OTC, that's I'm showing. Now every time you use a OTC, you will be inside of a premium area for sell short or a discounted area for buy long. I have showed it over and over again. I don't want to talk about it anymore because that's 6.2 level. The retracement is happening from a move to the other corner. It's happening inside of that 6.2 level. So you are in premium for a sell short 100% of the time. Now usually you want to put your stop loss over here, okay, at the 1 if you are taking OTC entry. But since this is another fair value and the candle's high, it's a huge area to go for the price, like from here to here, that's a huge area. Even in like 1 minute chart, this sort of area will be a huge stop loss. So I can at least consider putting it on that candle's high. I can go even lower because of the mean threshold of this order block. Okay, that's the mean threshold. I can even put here like this, little bit above that mean threshold, because it's a huge area for price to cover. Remember, it has a very big area to, you know, like surpass to go there. That's why I'm saying, like, I can put here. If it was very near to each other, the fair value, then I would consider going for the highest level, like the 1, the OTZ 1, okay, the optimal trading entry or zone, the 1, the high, that could have been my stop loss. But since the mean threshold of the order block is here, why this is the order block? It clearly traded into a fair value. Either way, like there is your bearish fair value, there is your inversion fair value. It traded into that, and also it took the liquidity from recent swing low, swing high, like recent level. So why I'm saying this is swing high? You remember one candle, what I said, it needs to trade inside of a fair value gap. There is your inversion fair value, there is your bearish fair value. That's why that high is valid for my sort of things. Now with experience, you can use all of these. I'm not changing things over and over again. This is the simple thing, but it's a weekly, that's why that's a single thing. If I go to the daily, you will see it's a clear high. Okay, that's why I'm not talking about that. I'm making things easier for you guys. Anyway, so I'm entering here not on the low of the fair value. Why? Because the OTC is not sitting at the low. Also another thing, let's say the OTC, let me just grab it to a little lower so that I can explain it better. If the OTC was like this, then I would enter into the fair value gaps low. Okay, let's say like it went until this far, the OTC turned into something like this, that it's aligning with my OTC, but the fair value gap, it's bit higher than the 6-2 level, then I would go for that, because this 6-2 is not what I'm saying price will stop. I'm saying this 6-2 level is the area that is optimal for the price to retrace from. But from here, what can stop the price from going up higher is this one, the fair value. Or in this term, there is this. How I would enter into a trade? I would enter half of my position here, and I would wait to see if market wants to go lower from there, or it wants to come here and then go lower. If it comes here, okay, if I enter here, and if it comes here, today whatever I did for whatever days whatever I'm doing, I do it like this. I don't enter into my 1% straight away from this fair value, because that is also aligning with my OTC. Okay, and that is even a better entry. So 50% entry would be here, just to stay in the market, because if market wants to come lower from this area, I'm still in the market. Yes, my original profit could have been more, but now my profit is little less, but at least I'm profitable. I'm not missing out on this trade. But if market goes here, this is where I add my other half, keeping the same stop loss. In this case, this is my stop loss. If it goes there, I will still keep that same stop loss, just to add some positions. The average will be somewhere around this area. That's the thing. That's how I enter into trade, or the pyramiding thing that I do for myself. Anyway, so this is not the low, that's the low. So what I was saying is, since this is the part of the fair value that aligns with my OTC, I'm gonna enter there. Now where is the target? First target is this low. What I said about 1 to 2, if it's not giving me 1 to 2, I go for 1 to 2. Okay, this is my 1 to 2. That's how I use 1:2. Don't get me wrong. Okay, this is the level where market can go. I mean, I'm anticipating market to go, because from this low, market is coming to retest a fair value. So if it respects this fair value, if I'm right about my analysis, it should go and grab at least this liquidity, this low. Nothing on the left. Yes, there is other lows over here that can make it easier for the market to go there, but this is the one you should always target first, and then if there is something like this, you can look for that as well. Now this is how I get my 1 to 2. If it's not giving me the 1 to 2, that's how far I extend it. Not like if, let's say, it gave me this low, gave me like 1.5, I would never push that to 1 to 2 like this. Okay, if it gave me 1.5, I would simply target this, or maybe until this level, like this far, not anything else. But it's very close to 1 to 2, that's why I'm targeting that little bit lower than that target, because it's the drawn liquidity. But from where it can possibly reverse, that is where you can extend your take profit to. That's not coming out from me. Okay, you need to understand, it's coming out from ICT as well. It's not just the liquidity. It's okay, it took the liquidity, now it should go and reverse straight away. Let's say it took the liquidity here, it came lower, it took the liquidity. Should it go straight away towards the upside and give you a reversal, or it should trade into some sort of things that was supposed to move the price higher? Maybe a order block, maybe breaker block, maybe fair value gap. Something there needs to be like something like that needs to be there to send the market higher. Now let's see what happened here. What I talked about, this sort of swing highs, I call them inducement. Now I don't know if ICT talked about it or not, but I got it from some of his ICT's students. That's why what I say is, when I have opportunities to learn. I don't care who is teaching me. I try to learn. I really don't care who is teaching me. I try to learn from everyone. These inducements, I'm telling you over and over and over again. If your fair value gap is aligning with something like this sort of liquidity level, the inducement levels, that will be a very good area to go for your original move, because price is taking buy side liquidity, trading into a imbalance, and then it's going for a sell side delivery. So this is giving you a high probability. It doesn't need to go above this and then it needs to go lower. Okay, I'll just continue with the replay and you will understand what I'm trying to say. So price took that liquidity. Just look where price traded. 6-2. It could reverse from here. It didn't. It went there and then it reversed. That's the 6-2. That's the power of this 6-2 level. Anyway, now I'm not saying every time it's gonna happen. The moment you are correct with your analysis, that is when it's gonna happen. Now let me remove this inducement and let's see what happened here, if market came to my take profit or not. It came to my take profit. It created relative equal lows over here. Let's see what happens. Okay, it took that liquidity, it traded into a order block. Okay, this is the order block, maybe, possibly, I don't know, but am I looking for a reversal straight away? Not yet. Why not yet? Let me just remove all this because I draw it earlier. It may be, should I remove it because I will need it later on, that's why I actually kept it. Anyway, so you see this inversion fair value that was never retested, this weekly bearish inversion fair value that was never retested. Let's see what happens after market giving me that market structure shift or something. So I have some break of structures over there. Why I'm looking into this, not here? Yes, market took the liquidity from here. This is low, this is the lower low, this is the high. Okay, but when you have this sort of swing highs over there, you can consider this as your break of structure as well, or only if the displacement is good. If it's not, you cannot. You see this swing low, it didn't trade into anything, no fair value, nothing. Then why it came here? There is nothing over here on the left, but there is this, my friend. The whole block is acting as your order block. Okay, the moment price traded above that block over here, now you have your order block right there. Okay, the whole block. Even if you want, you can extend it to that far. So that order block is what price respected. Now not only that, you have a small little fair value here. Price came here, no body went below that, so it's respecting this fair value as well. The week came little lower. Yes, it can happen. Week is what caused the damage, right? Anyway, I'm looking into what happens on that bearish fair value. Let me remove this one. I don't know what was that. Okay, that mean threshold. You will see it gonna, if I'm not wrong, it gonna give some reaction from here as well. You see, it's respecting this, but it went up to that fair value. Now it's coming lower. So this one has delivered from this area until that swing low, or this was the, I think, swing low. Yes, so from that area it came until this far. Okay, it took all the sell side liquidities. So I'm not too much concerned about this fair value anymore. I'm concerned about this fair value. Now this fair value, it traded over there. That is your, if this is your inversion fair value, that is where you should enter into a trade. Now market is clearly bullish, right? It's bullish, it's going higher consistently, it's breaking your swing highs or the breaking the structures. It consistently, it's disrespecting your bearish fair values that it has created on its move higher. Like here is your bearish fair value. I think there are some others. When it started going higher, it disrespected all of them bearish, and it's consistently respecting the bullish ones, like whatever the bullish PRs are. So when these sort of things are happening, you are not looking for a sell short, but I'm saying, let's say you still used it from here, okay, where should be your stop loss? The bearish fair value, 1 2 3 candle, the high here, okay, that is your stop loss. Now a lot of people will say you can put around this area or around this area or little higher than. There is nothing called little higher, everything needs to be calculated. There is nothing called little higher than this. This is the fair value, 1 2 3 candle made this fair value gap. The high of that candle, wherever it sits, it's here. What I said, if you cannot see anything, just go for your 1 to 2. Let's see if market after this bullish move has delivered my 1 to 2 or not. It gave me the 1 to 2. Yes, market does give a fuck about your risk to reward ratio if it is tested. If you have tested, why I'm saying 1 to 2? Do you think this is not a good good stop loss? Because I am entering from this fair value. There is your small little fair value, that is your candle's high. You want to go little higher there? Let's go. Let's see if still it gives a fuck to my 1 to 2 or not. It's very close to that area, but let's see. Okay, so market, that's the most recent area where market currently is right now. So I'm not stopped out yet, but as you can see, market revisited that area and then again coming lower. Okay, so I don't know if I'm profitable or not, but if market wants to come this far, it can, I don't mind. But for now, to be honest, I'm not expecting that to happen. The reason behind that is, okay, so remember, like, it needs to grab this liquidity to give me that, since I moved my stop loss to higher. This is why stop loss is important as well. You just cannot put your stop loss somewhere and then target your 1 to 2. The calculation what I did, it clearly provided that. But what I'm saying here is, I'm not expecting market to go and no, not this one, sorry. I'm not expecting market to go and go grab this liquidity straight away, because market was in bullish condition. Okay, now talked about impulse, let's talk about the impulse. From where you want me to mark it? From this low? Like, why I'm saying this? There is your clear like loss of impulse, the way I marked here, right? This was only one candle, market continued lower, then it started consolidating, then it went higher. It went there, it gave you at least 4 to 5 candles for this pushback. So let's first look into that impulse, if it came to the discount or not. Did it came to the discount? Yes, then it started going higher. So now this low is where I'm gonna look into. This high I can look, but after this consolidation there is nothing, no fair value, nothing at all to trade. Okay, why I'm saying this? Did it came to your discount? No. What I just showed you here, if it doesn't come to your discount, the highest it is going, that is where you should go. This is your high. Okay, let me come back to the replay mode one more time. I'm just talking about the impulse, why I said that. Let's go here. How you mark it, if you know, you will never miss it. One more time. That is your high that market created after this high. During this time it didn't come to your discount, it started going up higher. Let's talk about that one more time. That's your swing high. Did it come to that discount with this low or anything? No. It started going up higher, it created a new high. Let's put that new high over there. Now from here it needs to come at the middle point. Okay, let me remove all my drawing and then let me put it one more time back. Okay, so it needs to come at least below this level or at this level if you want to go for any long setup. Now where is that level? Here. You have a small little fair value here, but below that you have some liquidity sitting. I'm not considering that for an entry yet, because let's see what happened next, if price actually came to that area or not. instead of coming lower, price went even higher to that far. Okay, now it's giving you some retracement. That's your what it calls equilibrium level. This is your discount, that is your premium. Let's see market come to that discount or not. So far, no. Did it come to your discount? Yes. Is it going higher? Let's see how far it can go. Okay, so that is where the current price is. This is why I was not looking into any bullish thing. Now let me get back to ES. Okay, ES has even better thing to show you guys. So that's the low impulse. Let's see if it came to your discount. No, it went up to this level. Did it come before this happened? Did it come? No. Where was the discount? Here. Like where was the high? Here. It started showing impulse, it came, it traded into that, took the liquidity, now it's going higher. Why I was bullish? Why on my Twitter? Okay, so let me just go to the X and let me show you why I'm like, what the hell, why Elon put it as X. Okay, when I posted it, I think it will be here 15 November. By that time it already took these two that I marked as due. I said this is daily due buy side liquidity. I still believe this is due, but I said it won't go straight to that level, because on the weekly, if you look into the chart, there are so many fair value gaps with this move. Okay, on the weekly candle there are so many fair value gaps. Did any of them got retested or revisited? On the ES, not yet. Not a single fair value gap on the weekly was retested or revisited. NQ today just did that. You see, this one single fair value got retested, but am I worried about that fair value? Not really. If it wants to go lower, I want NQ to come and trade inside of this fair value. Until then, I don't want to like look for more longs. Yes, I can still go from here because it didn't take the liquidity here, but the problem is if you go to ES, that was the liquidity I marked, like this liquidity. Okay, on the daily, this is the liquidity level that I was talking about before, like daily due liquidity, due liquidity. Did price take that liquidity, that swing high? What was that? 45.96.75. Did price went above that? 45.96.75. Price went above that. Okay, you see this, price went above that. Now it's giving you some rejection from what? That is your order block. Also there are some other things over here on the daily, like fair value, bearish fair value gap or something. Yeah, so there is a bearish fair value and the daily volume imbalance is sitting above, and this high is relatively equal with that high. Okay, these two are relatively equal. It's one tick lower. So I'm hoping this is the next target for the market, but for that it needs to trade and revisit some of the fair value gaps. Okay, it cannot just go straight that way and then, you know, come back whenever it wants to. Not like that. That's why today I traded shorts, I traded long. I don't mind doing that. That's why I have over okay, this is not the thing, but that's why I have over $1,400 profit today, trading 1-2 lots per trade. Okay, sometimes maybe 3, but mostly 1 or 2 lots on the ES. 1 or 2 lots is nothing. Okay, NQ 1 or 2 lots, that is a good risk over there. Anyway, this liquidity was taken. Now market is giving some sort of reaction or reversal. Also, this is the fair value that market traded. Where is it sitting? On the other side. Okay, from this side, this impulse, where is it sitting? It's sitting on the premium side, and that's the extreme level of fair value on the daily. That's the daily fair value and daily volume imbalance. Weekly, I think there is a small little volume imbalance or something above that, but here, okay, there is a small little weekly bearish fair value gap as well. That is where price tried to like traded, and now it's coming lower. So am I bearish? I'm not bearish. Okay, I'm not bearish, but yes, market can go lower for this sort of fair value gap retest. This fair value is still sitting inside of that okay, not this one, sorry, this move. So I'm expecting market to trade into, if it doesn't retrace to any like this fair value before going higher, this is the discounted area. If it goes higher from like this week or next week, I'm gonna extend it until it comes to my premium or discount area, as simple as that. Let's say it went up to this far, I'm gonna extend it until it comes to this fair value instead of this. Now this is where I'm gonna focus most, as simple as that. That's what I'm showing you, like from these areas and from these areas. Now if you go to the monthly, some people likes to go to monthly. I don't know what is the necessity of that to trade 1 minute candle, but look, this is the clear swing low, right? The clear swing low. Market took the liquidity, gave you the market structure shift. Now where is your impulse? This far. Did price came to this? Nah. Let's move to here. Did price came? No. Move to here? Came? No. Here small little monthly fair value, that price traded, now it's going higher. It's not yet tapped over here. Now the whole chart is showing bearish move on the monthly. Okay, this is the monthly trend, and all this without even looking into the date, I know when this happened. This is during the COVID lockdown. This is during the global financial crash on 2008. Let's see, is it 2008? Look here, like the chart, 2008, the global financial crash. That is where market came lower than the lowest point of its lifetime. Okay, then Jeff Bezos, Elon Musk, lot of like Steve Jobs, lot of people like them invested into the market, moved it higher. I have all the links as well. If you want, I will share with you those things as well. Anyway, so if they invested, it started going higher. Then the pandemic happened. Let's look, 2018 December, remember when the pandemic first appeared? And then this is where the like global pandemic happened. Like it spread like, I don't know, air or something. Lots of people died during this year. Okay, there was the lockdown and other stuff. People was literally bound to stay at home unless medical emergency and food, to buy food or something. That is also one person or something. I mean, yeah, you know the lockdown rules, whatever in your country it is. That is when this low happened, that went below the previous low. Now I'm not expecting market to come here, as simple as that. This month, look at the candle. Okay, just look at this candle. It's a bullish engulfing candle. Do you understand that? It closed above the previous month's high, and not just by above. It's a huge candle, huge displacement. So if I see the December is going higher, taking these sort of liquidities, I don't mind. And there will be your fair value gap as well. Now where it is coming from? There is your order block. Okay, why I'm marking this one? Because until this point, price, until like this candle, okay, price didn't go above its previous order block, like this whole black candle range. It didn't go above that until this. So whatever happened in between, it's all inside of that area. Now this is the extreme level. That's why I'm showing this one only, because the extreme one is your actual order block, the lowest down close candle. This one has your lowest down close. Why I'm marking this? It took all these liquidities, at the same time it traded into a fair value gap, from where it's going up. The moment market went above that high, this is where I have a confirmation of that order block. Now this is the time market came to that order block, retested it, now it's going higher. It needs to go above this high, okay, not that green candle's high, but this black candle's high. It needs to go and close above that high to confirm this as my valid order block. So if market goes higher from here, I will be looking into some sort of retracement into this sort of order block, but mostly my target will be here. Why here? If you go to weekly now, you will understand. You see, that's your weekly order block right from this area. Okay, and there is your fair value gap as well. That's why that one. Anyway, I hope you got my point. Okay, I'm not making things complicated to you guys. Yes, there is your inducement that market took the price and now it can come and grab this sell side. I don't think it gonna come and grab this sell side anytime soon, like before grabbing all these dues that I showed on my Twitter. I talked about it on 15th November, although I had it marked earlier, but I forgot to post it. I had, you know, this sell side liquidity, I marked it due sell side liquidity, and trust me, I calculated every single swing low, that if it is due or not. Is it due? Like this high, market traded above that high. This is the lowest point, market traded below that low. Only this low market didn't trade. Okay, this low has no trade yet. So I'm just calculating from here. Why? Because everything else you can see on the left was traded. Every low was traded until this low. This low was never traded. This low. Okay, this is the pandemic time. Now, is this low a due sell side liquidity? Let's see. From the high, I'm gonna come from the high. Price took this liquidity, failed to close above. So this is, sorry, this is the next day's target. It created a huge gap, came lower, closed below as well. What is the next target? This. Now next day inside candle, like this is weekly, so next week inside candle, the next week after it came, took this liquidity, closed below this and the previous week's low. So now my target is this low. Okay, I'm gonna draw it on the left side so that you can see what low I'm targeting. This low. Price opened, whatever it is, there is a volume imbalance or open new week opening gap. It came lower, closed below. What was the next week's target? This low. Price created volume imbalance, trade lower, took the low, like the liquidity from the low first, then it failed to close below that. Now I'm moving towards the buy side. This is where market is trading since then. Okay, like this is how. This way, whatever you can see, I have posted here all the liquidities. That way I have calculated every single highs and lows. Okay, that's why I know when price came here, that low was due. Okay, now why that low was due? Market never leaves anything due. Okay, and there are lots of buy side liquidity that's all due over there. Why this low was due? Whatever the calculation, you will understand later, but why I'm saying only this low was due. Okay, let's see if this low is due or not. Price took the liquidity from upside, it failed to close above, so this low was the target. Market took this liquidity, closed below. This low was the target. It took the liquidity, failed to close below, so target was shifted to higher, so this low is not due. Same thing here. Price like took the liquidity or took the liquidity, however you want to mark it. All this high has been traded since market is above there. I'm not looking at the highs, I'm just looking at the low, so I'm calculating from here. So price took the liquidity, failed to close above, so next day's target was this candle's low here, this one. Price took the liquidity, failed to close below. Now my target has shifted to this one. But what market did was, market created a inside candle of that week, like this one. This was the range for that week. So the next week created a inside candle. What was my target? The buy side, right? Because it failed to close below. Inside candle, the next week it opened, took that buy side liquidity. Now this week it failed to close above this level, but it closed above the previous week. We always look into the previous week, okay, or previous day. However you look into your chart, you can mark the previous day comparing to that where it is closing. Okay, let's say it failed to close here, so you think this is your due. If that is your due, that due has been cleared here. since it failed to close above that. But I don't look into the target, I look into the immediate previous. That's why I'm saying it's already, this was not due, but if it's due, then that was cleared here. Now here market closed above that high target, closed above this low was target. Okay, this fall was because of this low, not because of this low. However, I'm not gonna create any controversy. Took the liquidity from high, failed to close above. So now market should take this liquidity. Instead, market went higher. Higher, grabbed all these sort of liquidities. Later on, it came this low. So it has traded here. Now this liquidity was a target. Why? Plus market took the buy side liquidity. Let's come from here. Okay, from here, took the liquidity, failed to closed above. So this high is my target, which I can mark as my due. Now let me just remove all these things so that it can be clear. Okay, let me remove all this. Okay, there was the due liquidity over there. I think, which one? This one was due. Why this one due? Because took the buy side, failed to close above, so this one due. The next day it took the buy side again, closed above, so this one due. Like this one is the target, it took the liquidity, closed above, this one is the target. Now for these weeks market consolidated. Why consolidated? Because it traded inside of this previous week's range, it's trading there. So let's see what happened. Market took the liquidity, it closed below this, it closed below this. Okay, the buy side is still due. Why it's due? Is because this is due from a long time. Okay, let me remove this one. Let's see where market closed. Okay, it doesn't close like that. Okay, oh shit, too fast. Anyway, market closed below the previous week. Now this was the target. Market closed, like took that liquidity, failed to close below, so that high was the target. Market took that liquidity, failed to close above, it took the liquidity, closed below. What is the target? This one. Okay, so the due here is now clear. Next target, it took that liquidity, remember, it didn't close below. So what is my next target? The buy side, and I have a due on the buy side here. It's even a, okay, so I have to actually, this is a problem. Why I'm saying this is because I thought that's the end of the candle, that's why I actually marked it and moved it. But anyway, so on this day price took this buy side liquidity, failed to close above, or this week actually, I'm talking about week. Now this is my target for the next week. Let's see, like this running week. Why it doesn't give me a complete candle straight away? What happened? Market didn't take this liquidity, it took this liquidity and closed above. This is the target, this is due. Let's see. So that liquidity was taken, market failed to close above. The next week my target was this low, still it didn't take it. So let's see what it took. It took the buy side liquidity, keeping this on due. Why I'm saying market never keeps anything due? Let's see, because there was a buy side due as well. Remember, it's been due for a long time now. Since it's going up, I'm thinking it's going for that. Anyway, it took the liquidity once again, failed to close above, so this low is also due. Now it's taking the buy side liquidity once again, I don't know. Okay, now it cleared these two due. Okay, both of the due. Why I'm saying this? Took that liquidity, failed to close above, this was due, and those were due as well. One single candle, all traded, closed below. This is due. I don't know if that is the candle. Okay, this is a problem. I'm making it complicated. I'm sorry guys. The weekly is too big of a candle, and the maximum I can go is 10x speed. What? 10 updates per 1 second. But why you are not giving me the candle at a time? Okay, so it failed here. It took, cleared this due, it failed, so the buy side was the target. Now price took that buy side, failed to close above. Now this sell side is the target. I'm gonna exit out of the reply mode because it's not giving me a full candle at a time. I don't know when TradingView is going to be doing that. You see this due was there since then, okay, and that is the due that market cleared, and the buy side due, it cleared here. So what I'm saying here is there was nothing else due but this one, and that's what market took from here. Now it's going higher, and that exact that way there are lots of due on this side as well. You see, like here, why I said this is a due. On my Twitter I posted this photo and said this is a due. Why I said this due? Because on these days market took the liquidity, or this week market took the liquidity from buy side, closed above. So this should be the target that market left behind and started going lower. Why lower? Because this one was due during that moment. It's closing below the previous times, okay, closing below this, closing below this. So what is the next target? This one. So market left this one due, it went there, retested the order block or whatever, if there is a very small little fair value, retested that, it started going lower, and finally it cleared that due, keeping another due up there. Market came lower, cleared that due, now it's going up, it now cleared that due because it's been due for a long time. Now you cannot see anything due here, but if you go there, there is another due over here, okay, there will be due over there as well. If I'm not wrong, there are some dues over there as well. I have everything calculated here, and I can use these, like you see, like W slash or W-D due by side. This is the weekly and daily. What is that? 4910. Let's see, 4910 should be somewhere around this area. Oh sorry, 4910. Okay, so this high is due. This is the weekly due. Why? Because market took the liquidity, failed to close above, right? It should take the sell side. It took the liquidity, failed to close below. Here it failed to close below that this day, like this week. So that high was the target for the price. Market came lower, cleared all the due that it left behind before, like previously, all the due that it has, it cleared all of them. Now market is going towards that. So I'm hoping this due will be cleared. Now on the day or daily, it's the same thing over there as well. Why? Because as you can see on the daily, market took the liquidity, close above, took the liquidity, close above, okay. So that high should be the next week's target. What price did was it opened, it created a high, it started going lower to clear the sell side first or deliver the sell side. Also there is your bearish fair value gap that market traded and went lower. So now if market wants to go any higher, it should go and grab this liquidity, and with this I think, if I'm not wrong, there are some relative equal, no, not actually that one. I think I marked the level with relative equal, something like here. What is the level? That is 4688.75. let's see, 4688. Okay, I think that's the weekly or something. I don't know, I really don't know actually what is the relative equal I got over there. Okay, I think that one was this one that I was referring or something, and it already has taken 4688. Did it went there? No, it went 4607.75. so I think still this one was the one that I'm talking about. 46, oh no, what the hell, this one, the 4688.25. so let's see what is that. Okay, yeah, it's the daily swing high over here and the swing high over here. So that's the relative equal that I'm talking about, and currently market is trading here. So that 46, it's not 88, sorry guys, I think there was some sort of gap over there. Yes, that's why, or maybe on the left where I marked the high. So the price should be 4687.25. okay, like from this swing high on the daily swing high to this swing high, there is your relative equal highs, and market is currently here around this area, so it's not too far. rather than going to this due. This one is due, but it cleared or traded from a fair value gap, so I don't know how long it can take, or like since it traded inside of that premium and discount area, and the PDRs are here as well. So since it did that, I'm not thinking or hoping price to come here anytime soon before grabbing that buy side or that swing high, because to come here it needs to first clear this buy side liquidity, since it's respecting that bullish fair value on the daily. Okay, this is the bullish fair value that market respecting. So if it's respecting this, it needs to go above that high, because from this fair value gap, that is the highest level market went, and now it came to that, retest that, and this is the first fair value. Okay, now talk about the first fair value. Why I don't call it as a breakaway gap straight away? Yes, if you see, it didn't trade here, it traded the second fair value. The third fair value, we don't look into that. Why? Because from a swing high to a swing low, okay, I saw people are talking about this. The first fair value will always be inside of your discount or premium, considering which side you are looking at. The second fair value, most of the time it sits inside of your equilibrium level, or like part of it will be inside premium or inside of discount, like depending on what sort of fair value you are looking at. Why I counted from here, why not from here? It's because it came here, right? It came and traded that order block which is in your discounted PDRA. It traded here from that high, it already traded inside that, and this is purely consolidation, it's not a impulse. This is actually impulse, so that's why I moved it from here to here, and that's your discounted area. Price went higher, it didn't came here, that's why I'm still using this one. Now this is a breakaway gap when market came here, traded inside of that fair value. Let me just remove this one. Okay, when market traded here, traded inside of that fair value, it kept or left this portion open. Okay, a breakaway gap must have to leave the portion open. If it doesn't leave any portion open, this is just another fair value, this is not your breakaway gap. Why I'm saying this? I have showed you so many times, but one last time let me show you as well that specific part. Advanced fair value gap theory. Advanced fair value gap theory. You see the breakaway gap he wrote here. Let me go and play that specific part one last time, for the last time. Okay, he's entering there, he's exiting here. All you can see, there are few things over here. That's why I'm saying it needs to give you a second break of a structure sometimes as well. Like here, price took the liquidity, market structure shift, there is your fair value, price traded that fair value. Because of the volume imbalance, it traded bit higher than the fair value. That's why I said when I have a volume imbalance with my fair value, I try to include that together. Yes, that's my personal thing. ICT didn't even draw that fair value and didn't even enter into that fair value. Okay, why I'm saying this is personal? You look where the like highest area or level is, that's where you have your volume imbalances. Like the green candle's body, look there. Now black candle again created a small little volume imbalance over there, then it started going lower. If that volume imbalance was here, if it was me, I'd like, why I'm saying this, because you have to utilize your volume imbalances as well, and in that case forget about volume imbalance, just focus into your breakaway gap. Okay, I'm not here to make things okay. Now this is You got that point? That's what I'm trying to teach every single time I'm talking about a breakaway gap. This is why not just any fair value gap is my breakaway gap. Okay, this is a first fair value gap. Yes. Is it a breakaway gap? Yes, it is a breakaway gap as long as it keeps that portion open, that upper part, like it traded until this far, that portion is open. This is a breakaway gap until then, but 1-2 fair value gaps I'm gonna enter here. I'm gonna expect this is as my breakaway straight away. No, I'm not gonna do that. Okay, let me go to trade of it one more time. 750 profit, forget about the loss. Okay, I already explained what happened during this loss. I talked about it over and over again. Doesn't matter. If you don't want to take this on, you want to count this as a losing day, that's a losing day. On next day, $1,400 profit, $1,200 profit, and today what is it? $1,415 profit. What is my win rate over here? 70.1%. 1.82% is the break even trade, because there are a lot of things. Okay, this was the day I had a position opened. That's I already explained it. It gave me so many entries and so many fields over there. It grabbed all my profits, everything. You see the curve, look at the curve. Okay, this is how I made the profit, this is how I lost it on that day, this is how I made it back again to 33.20. I have completed my challenge on the top step. Okay, this it's not is yet updated because of the before it used to be updated on 8 AM, like my time 8 AM. I don't know if you guys can see my time or not, but usually it was supposed to update by 8 AM, but due to the daylight saving, this shifted to 10 AM. That's why it's not updated over here yet. I'm thinking it's not updated. Let me reload and let me recheck. Yeah, it's not updated. You see, like this is the curve, this is where I started. I had profit on that day. That day messed up completely. Anyway, I'm not gonna talk here. I'm gonna just go to my trade of it. I shouldn't do this, like show the account and other stuff, but as you can see, this is the balance right now. So I completed the task or the challenge that I took. Because of my on my previous live, some people was asking me to show them that I can complete a challenge. That's why I took this challenge once again. Now I have 3 funded accounts with top step, and this is my today's PNL. Okay, on the week when I have a lot of news sitting on my head, news like PMI, news like non-farm payroll, news like unemployment claim, unemployment rate, all the red folders, I still got $1,415 in profit. Okay, and I completed my challenge. So yes, that's what I'm trying to teach you guys, why I'm showing you the breakaway gap and why it's not a breakaway gap. Because I need to see that the portion is open. If it taps completely, if it fills up completely, that's just a fair value gap. Okay, now depending on where the fair value gap is sitting, if it's in the premium or discount, I'm already talking about the impulse over there. Depending on that only, then I'm gonna consider entering. This is the fair value I'm marking, not because there are other fair values. Now why we don't want to mark the fair value below the liquidity level? I have a friend who talks about this. He doesn't want to look into the what it calls the fair value that is sitting below the liquidity level. He doesn't want to use that because his observation says this fair value is not a valid fair value. Okay, why is that? Why that is not valid? Ask him. If he can says the answer, I will be happy to learn from him as well. But my observation or my knowledge that tells me why this is not valid is because when the price is below your liquidity level, okay, that is most likely gonna fall into a place or area that is outside of your OTZ. Okay, optimal trading zone. Why I'm saying this? Let's mark the OTZ. You see, this fair value is still aligning, but did market came to your discount yet? No, it did not. By the time it comes, if it goes higher, okay, let's say it went there, wherever, I don't care, whatever it is, I don't care. You see this 7.9 level. If you check on ICT's channel, the OTE, let's see, he says it optimal trade entry, that's why I said OTE. Okay, you see this video, go watch the first 5 or 10 minutes. I don't want to talk about it here. Why I'm saying this is because when a price retracement happens below that 7.9 level, that is something, just think about this way. When price is coming lower, you have a bullish breaker block over here, you have some other things, you have a order block over here, price is coming even lower than that. When price comes here, is it too hard for price to go and grab this liquidity or going for the buy side delivery? It's not too hard for price to grab this sort of liquidity. That's why I don't want to look into a fair value that is below my OTE. Now here, this is a daily chart, it's not a good example of showing this. Okay, and some people also said you need to have your example precise. I will try to do that. Okay, I will try to make, when I'm making videos, I will look into chart. This was a sudden live stream, I didn't post anything on my Twitter regarding this stream. Usually I post something, right? I post few things over here that I'm gonna go see, I'm gonna go live in an hour, something here. I usually post. Okay, you see previous month on my funded and including this is how I made my profit. Am I consistent with my profit amounts over 1000, like 1391, 1258, 1266, 1128, everything is above 1000. Why? Because as I said, when I see, like when I enter into a trade, I enter with 1% of my account balance, which is $500. My minimum target is 1 to 2. Okay, so that $500 gives me $1000 in return. But if I see the liquidity level that I'm anticipating or targeting is higher than 1 to 2, I will go for that liquidity level. If it's lower than 1 to 2, I will go for 1 to 2 only. So I get either $1000 in profit, or if the liquidity level is more, giving me more, I get more like that. So my minimum is 1000. That's why you can see I have not closed a day without making over $1000. Okay, 1200, 1128, 1266. And also there are some other things like in NQ, in like forex, you can trade however you want to trade it. Like you can set your 1% in forex. Okay, why I'm saying this, let's say I'm looking for a long setup from here, that's my target, this is my stop loss, just for the sake. Okay, I'm not saying it's not 1 to 2 or anything. Wait, what I'm trying to say, you see here it's saying 0.94%, and for 0.94 I can go with 2 lots, 2 units. I cannot put 1% risk over here, it won't let me or allow me to put 1%, because that's the max unit I can get with my $500 or less than $500 risk. So when my, let's say this is where I'm entering into a trade, and this is my stop loss. When the stop loss is low, I look for another entry. Now you will see me putting more positions over here, and the 5 is the max I can go. With 5, this is what I'm risking and this is what I'm taking as my profit, and now my take profit is like 4 point something, that's why it's showing like that. But when these sort of things happen, I try to target the liquidity level. Here there is nothing. The day, like where I traded, I had a few things to show, like on NQ you can see, sorry, I traded today on ES, so you will see here on the silver bullet time. Okay, silver bullet time, I have a 15 minutes bullish fair value. There are a lot of things, I'm just going very shortly. 15 minutes bullish fair value, market created so many relative equal lows over there, market traded that. Let me check where my executions were. Okay, so this was the last trade that gave me that profit. Why I targeted until this far is because that was enough for me to take my like account or challenge, that was enough for me to complete the challenge. That's why I targeted there. But how I entered into trade, you can see I have already traded some sell shorts over here as well, and then I went for long. Why I traded sell short is because I have a 5 minutes bag breakaway gap. Okay, now in 5 minutes let me show you why I said that is a bag. You see this, there was the 5 minutes fair value when market traded here. Okay, it's coming lower from a long time. It gave you that second break of structure. There is your other levels as well. This is also your bag as well. That's a 15 minutes bag. That's why I wrote it breakaway gap here, because 15 minutes, this is where market is trading, and that's how far I wanted to go with, no, with this one specific, this one I wanted to go somewhere around this low. Okay, but anyway, let me talk about this. You see here market traded into that fair value, it left that part of the fair value open. That's why I marked it as a bag. I didn't mark it after looking here or here. I just had to drag it that way. Why that way is because this is a bearish fair value, market traded, it took all the liquidity. I don't mind seeing that. You see there is another bag, I think it's a 15 minutes bag, and a 15 minutes order block mean threshold. Just look where market traded, exactly on that order block mean threshold. Let me go to the 15 minutes, you will understand. This is the fair value I was talking about. The immediate next candles refill here, market went higher, then again came lower, filled that up. So I shouldn't actually mark it as my bag, it should be just a fair value gap, since market took the liquidity after. Okay, it took the buy side liquidity like this high. That's the highest level. Market went from this fair value, then came to that, it completely traded that fair value. So it is just a 15 minutes fair value. I'm sorry, I shouldn't mark it as a bag, because I didn't realize with this move it didn't actually go higher and took that liquidity. That's why. Anyway, so market came there, you see the order block. Why I'm marking this as my order block, and that's the mean threshold, because you see this low was traded into the lowest down close candles midpoint, or I need to see it traded into that previous order block that took all the liquidity from left. This is the liquidity that market took. So until something comes and trades in that order block, I don't have a order block. As simple as that. The moment price from here came there, and then it went above that high. Okay, this high, when market closed with this candle, market closed above that high, that is when this order block is confirmed, and we usually look into the extreme on. So that's the extreme on, and as you can see the middle point, that's the middle point. Okay, that's why I marked that mean threshold, and this is the first time. Okay, here market traded into the high of that order block, but I'm looking into this specific candle. Market didn't trade until this, market didn't trade into that order block level or order block's body. This is where market traded. So this is your order block. This is a high probability order block. Okay, not just order block, high probability order block, because that took all the liquidities from left, and also here it traded the previous order block and respected that mean threshold, and there is your 15 minutes fair value gap that market just traded. Okay, and then it's going higher. Now I took short from here, no sorry, I took a long, I took another long until this was traded, and then I took a short. Sorry, I'm making it up. So I took a buy, I sold. This one was kind of a break even sold out, because I didn't realize it's on the NQ. It already traded by that time. It already traded that hourly breakaway gap. Okay, on here it didn't tap by that time. You see, like this high didn't tap into that even 15 minutes on. There was hourly on the left as well, somewhere here, or this one I think. Yeah, so this one it didn't tap there, but on NQ it already did that. So yeah, I exited with some This is all scalping, okay? Because of the day I went for scalping, that's why I'm saying very short. It's 15 minutes looks like this. If I go to 1 minute, it will look even different. Why I'm saying this? You see that 5 minutes breakaway gap that I talked about. This time when market came lower, it traded that mean threshold or 50%, it came lower, it traded above. So in this case, I already saw this was the test or retest, however you want to say. I missed it, but there was huge fair value volume imbalance. So the first entry I took was inside of that volume imbalance. The second entry I took was exactly here when market was here, but market execution, okay? So because of market execution, I got it here, but this one was a limit order. That's why you can see it gave me exactly on that level, okay, there. But the second one I put on the market execution when price tapped on the lower part. Unfortunately, it gave me at the same level, exact same level, okay? So it didn't improve my position, it just left it as it is. So when I saw I got it at the same level, first I didn't realize, but I put my first take profit under this low. Why under this low? Is because I had how many lots? 2 and 1, 3. So I exited out this one, the one I was expecting to enter here. I exited that one here, okay, and the rest one I left for this volume imbalance level, okay, or the order block level. You see, there is where I got my second entry, second take profit. That is where I took my take profit. Now talking about impulse, this is your impulse. Is it going to the OTC? That is where your OTC is. So if I looked into the OTC before, I could have entered into that tab, okay, just by looking into the OTC. I didn't looked it before, I'm just showing you now straight away from looking into the movement. I can say like it went there. That's my first sell short take profit. Then I went for buy long from here. Why? Because it traded that order block, it traded that 15 minutes bullish fair value, and the bearish inversion is sitting here, okay? I don't really need this 5 minutes because I have the 15 minutes. It traded the common area of that area, the 50% level got respected. It took all the anticipated liquidity. In 15 minutes, it looks like a retracement. The first short was just for the retracement, okay? This is the bullish fair value. Why I targeted this is because market has done its job on the left. It has traded this, it has traded this, it's now trading this 15 minutes fair value, and there is your order block as well, the one that I marked. So that's why I was anticipating or expecting price to go higher from this level. Also, like it was during the silver bullet, okay? You see there is one line at, why it's showing like 16. I usually put my chart into 24 hours mode. Let's show you the silver bullet. What is the time here? 3 p.m. this and let me mark the 2. You will understand why I'm saying this. So this is 2 p.m. this is 3 p.m. Market came into a bullish fair value, took all these relative equal lows from here, okay, all the liquidity, and it created some relative equal lows here. But mostly I was anticipating a pullback to, you see there is another bearish fair value that I have marked over here. That one was never retested until now. It was never retested. You see here, this fair value was the first fair value. It retested until this far. That's why I marked it as my buy side. You see the buy side, this is why. Okay, now a lot of people might say it's a single high. I don't care about single high. I know market gonna go and grab here, and talked about inducement, right? The swing highs inside, this is the internal swing highs, that is inducement. Price went there, and after trading that bearish fair value, now price is going lower. Why I'm expecting this fair value? I talked about impulse over and over again. You see that this one, it traded there, that was your, okay, let me just change it to empty. That was your premium. Now inside of that premium, I'm marking from this. Actually I have to mark from that high because that's the high. Then it's not my swing high, that's my swing high. So it traded above that area, came lower, grabbed the liquidity, coming again up there. This is the bullish fair value that I'm expecting now market to respect. That's what market respected. Now it's a pure consolidation. If I had to trade on my funded account, or if I was not so close to finish the challenge, I would never trade into a situation like this. But there is another thing that I want to show you in 1 minute. Okay, you see this consolidation, I marked it earlier, but I will, like on NQ, it will be very clear. You see, I have these areas marked without any name. This was your consolidation or accumulation phase. Market gave you the distribution towards the downside. Why I wrote this one as my bag? Not just because it's the first fair value, but because price kept the portion open. Okay, that's important. Why this is a bag? Price kept that portion open. Now here you can say it traded completely, but did it respected that bearish fair value and went lower to grab that fair that what it calls sell side liquidity? No. Also on the weekly NQ, so the whole time I was trading like this. Okay, let me just make the chart like that as well. So let me go to 1 minute, let me go to ES on that side, and this is my NQ. Let me go to the weekly here. The whole time I was trading like this. I had my NQ open over here in 1 minute as well. Just focus on the NQ. You see this bullish fair value, and let me go here as well. I will remove everything because there is a lot of cost. The whole day I have been trading like this. Okay, like this, all this. Don't think this many trades I have done. It's like I have pyramiding, like what it calls. I have been pyramiding during my entries. I took an entry. I will tell you how I enter into a trade. Okay, how I pyramid. It has a very small little fair value here. Okay, I usually don't care about this sort of fair values, but I was expecting at least price to come here when NQ, that's the only fair value, like the only fair value it has around this area. NQ traded that weekly fair values midpoint. Now it's going higher. Yes, it's going inside of that previous week candles range. If that can happen, it will be great, because I'm expecting market to go up higher. Okay, I don't care where it went. Let me just take off my positions because that's pretty disturbing. Now we can see it clearly. This fair value was on NQ, this fair value. Okay, like the first one that I'm talking about. There are more fair values here, there are more fair values here as well. Okay, so that's the only fair value NQ had closest to current price level. The weekly fair value bullish, it traded the midpoint, then it started going up higher. Here that was the smallest possible fair value, still market didn't come here. Okay, it's showing still. Why I'm showing this one is because, as you can see, it took this liquidity. If I'm not wrong, NQ didn't take that liquidity. If this is not the level that I'm missing out. Okay, Monday 28 August 20. Okay, so NQ also took that liquidity. I'm sorry, I misread that part, I think, because I don't really trade NQ. Like mostly I trade the ES. Okay, and this is one single trade that I took at the very beginning, and that, like during a silver bullet or maybe after a silver bullet, that I actually ended up losing or something, if I'm not wrong. No, I break even or something. Anyway, I don't care about NQ. I mostly trade on ES. That's why you will see me trading ES most of the time. So what I'm saying here is, here ES didn't make that low like NQ did. Okay, so when I saw the rejection from this mean threshold, during that moment ES was trading inside of a 15-minute fair value and a hourly fair value. So that's your hourly fair value and the order block as well here, and the 15 minutes fair value. Oh sorry, that's the 4 hours. Hourly is bit lower than that here. Isn't that the level that I was anticipating? Yes, I think, like the liquidity grab, order block retested or revisited, liquidity grab, yep. And the 15 minutes, let's see where the 15 minutes fair value that I marked over here. I think this one, yeah. So when this low was created, I will show you on the 15 minutes as well. NQ was trading that bullish fair values midpoint. Also it reacted, went above of that bullish fair value. Now when it's coming down on the 15 minutes, this was the fair value I was anticipating. Now you will see me a lot of things drawing over here. What I was doing is I was looking into NQ in 1 minute as well, sorry, and I was drawing everything over there, okay, and I was looking here in 1 minute and looking like how the market is reacting on this specific pair as well. Like the fair value here, it's retesting. I'm gonna draw that fair value if there is any. There is nothing. It's more bullish, it's more bearish, as simple as that. In a day like this, if you want to go for sell short setups, go for NQ. If you are looking for buy long setups, go for ES. That's how you should use your weakness or bullishness, because US 30 was even more, like it was bullish too, okay. It was doing mostly the way ES was moving, but NQ was moving, sorry, I changed it on the wrong area. NQ was moving slower, okay. On the sell side delivery, it was doing this. On the sell side delivery, where is that one? I actually messed up all the things, because okay, no, that's the 15 minutes actually. So now we can see, yeah, here it came until this far. It was more bearish. It was not bearish because the fair value that I was talking, it was sitting here, the weekly fair value. It didn't come there. It started moving up from here, okay. That is your SMT or whatever. I don't really need SMT, okay, to trade. I'm looking into one chart, I'm making things clear, visible for me, I'm entering into a trade. That's how I'm profitable over 3 funded accounts now, okay. Now this one I have to pay to make it funded. I'm not sure if I'm gonna do it straight away or not, because I really don't think I can trade 3 accounts at a time unless I can use some sort of copy trader or something, okay. I cannot. It will take away my focus from current charts. I didn't trade long from here, or I didn't trade long from here. I waited for market to go higher, give me the market structure shift, and the last trade that I took, I will show you the very last trade here, okay. The why I'm saying that these are not trades, these are mostly pyramiding, is because, let me put the execution levels as well, you will understand. You see, I took one entry here. Why? The fair value, okay, that's where I entered the top. But when there are 2 fair values or more, especially the discounted on this one, okay, from here to here, where is the discount and premium sitting? Let's see, I have to put it a bit lower as well here. That's your premium entry, right? But this is your discount. You see, most of my entry was here. I just entered here because I wanted to make it short, and I closed my one position there as well. You see, I bought one, I closed one here, just on that high. I didn't wait for price to go above and give me all this, because I had, remember, there was another 15 minutes breakaway gap that market currently traded and coming lower. I didn't wait until this sort of highs, because I didn't need that by this time, okay. So I entered into one trade here. Then when I saw market is coming inside of this fair value, it left some portion open until this move. It left some portion open from the midpoint until this move, okay. So this is where I took my first partial or first position of. It can be any of these 3. So when these average thing happening, my overall entry became way lower than where you can see here, okay. That's why I entered one here, I entered another one here. Now market executions, this is what why I hate it. This one I created a limit order, I can remember that if I'm not wrong. This one I created limit order right when this one was filled, okay. But this one I executed market when market came again to that low. But these bloody spikes or movements, it always gives you that 1 or 2 pip higher, okay. You will never get the entry exactly where you are trying to enter. Like price was literally stopped over here, it came here, it stopped for few like nanoseconds or seconds, whatever, however you want to say it. I pressed my buy long, took my position when price was sitting over here, then it went 2 ticks higher, that is where it gave me my entry. And now why is this happening? It's because you have some server delays, some millisecond, like 200 100 something like that server delays. If you don't know that, use a MetaTrader 4 or 5, you will understand what sort of delays are there. You have some server delays over here, okay, even in TradingView, because this data or these candles, this chart is not something that TradingView itself is producing. It's taking it from a third party exchange or something. This is not something that it needs to first see the value and then it can recalculate and print that data. That's why there is a few millisecond gap or delay in the market, okay. You will never notice that millisecond if you don't look into the market in some other, like, you know, what is this CME. Just go to CME, if you can find the value over there, try to catch that moves with here, okay. You will understand where is the delay coming from. Anyway, so that was the first partial that I took. Then these two I closed here because that high was good enough to complete my challenge. That was the challenge, 53.044, okay. That $44 is extra bonus that I have completed over here. Anyway, so this is where I have, and that's why I look into the first fair value gap. Now my friend talks about it, I don't want to make it controversial because he calls it a breakaway gap, okay. That's a breakaway gap, okay. The first fair value is more important, and if you are entering into this one and seeing price coming here, if you are correct about your analysis, confident about your analysis, this is where you should pyramid. I didn't add any more on this low because when I took that first partial and I saw how much my account balance is moving up there, remember the video that I showed you? Let me get back to that folder one more time, okay. I'm sorry if I'm referring to, let me just pause this video. How much it's showing at that level, okay. I was trying to start this recording, I missed that high. If I saw that, I would market close that. It's showing 1299.80. so when this one happened at that level, I already saw that it's almost done with my challenge. That's why I didn't add when market again came here, because it left exact equal low. It's not relative equal, it's exact. Relative means this is a high, this is a high, these highs are relatively equal. It's equal to each other, it's not equal but it's relative to each other. But here it's exact equal, okay, because that's the highest point price went, that's the highest price went, even this highest price went. When this happened with this candle, it created an exact equal, but with that high it created a relative equal high. That's why I moved my take profit to this level, because I noticed that I don't need to go for higher. I had one position here, I had one position above this area. That's why I didn't go there, because it is already giving me what I need to complete this challenge, okay. I already secured one position here. I have $52,673.30 as my equity already, and with this 325 open profit, my total balance is looking like this. So when I saw that, I literally moved my take profit to this high, like market will come lower after that and then it will go back again here. What's that? Just look when I draw that BPR, okay. I was writing something during that moment, but you see that BPR, when market was coming to that area, even before it closed, I draw that box, I wrote it as my BPR. Why BPR? I talked about it in my thing. This, oh shit, what I closed. Did I close? I don't know what I closed. Where was that entry? Here. I was talking about this specific move. Here. Okay, before I closed. Why I marked this fair value as my BPR, balance price range? Because sorry, what is this? This is a bearish fair value. Okay, so let me mark it like this. This is a fair value gap that is bearish. From a bearish fair value, what is missing over here? What a bearish? Let me actually write it down. This is a bearish fair value. I'm gonna copy the same and put it at the same level on the right side, and this is a bullish. I have so many trade executions videos. You will see me utilizing this sort of things in those videos as well. If you have any confusion, this bearish fair value gap is called SIBI, which stands for sell side imbalance, buy side inefficiency, and that bullish fair value gap is called BISI. Okay, buy side imbalance, sell side inefficiency. This is buy side imbalance, this is sell side imbalance. When that BPR is happening, okay, let me actually go back to that BPR area, this area. When this sell side imbalance, buy side inefficiency happened, this move provided with that buy side inefficiency. So the buy side inefficiency is done here. Now with that, it created another fair value, which is buy side imbalance, sell side inefficiency. What do I need over here to balance it? So buy side imbalance, sell side inefficiency, I need a sell side delivery like this, the complete area of that fair value. So now sell side inefficiency is completed. I have a sell side imbalance, sell side and a buy side imbalance. When market was coming to that black part or the bearish fair value, it delivered that sell side imbalance. It rebalanced that sell side imbalance. Done with that. Now what I have, a buy side imbalance. This is where it's going. Again came, filled up completely for the both side. Now it went up. It delivered both of them. Okay, so when there is a fair value gap like this aligning with another fair value gap, from that candle's high to this candle's low, whatever the fair value gap is, or in short the bearish fair value and the bullish fair value, the common area is your BPR. Okay, price came, filled up completely, expect that from the BPR. Now all the time you will not get it straight away like this. It created equal high, it came lower, then it went higher. Okay, straight away you won't get like this. When it was reacting from this area, you see, that's where I exited already with both of my positions, like the remaining positions. The reason behind that is this is good enough refill over there. It left that much unfilled, like the body that much unfilled. I don't mind seeing it reacting there and going above that high one more time, and then finally disrespecting this area straight away. You see, like this candle, when it came lower, it straight away broke below that. So I don't really need this after after this move happened. I don't really need this. This is a pure consolidation, and then like the whole move, if you go to 15 minutes, this is a pure consolidation. Just look, it was range bound, and I took the entry inside of that consolidation just because I needed very less amount to make that profit. And during consolidation there will be lot of accumulation as well. Like this phase is called accumulation phase, so it will grab liquidity from buy side, it will grab liquidity from sell side. So whenever I saw it's grabbing liquidity from sell side, I got confidence that now it's going for that buy side. That's why I targeted that far. Okay, So this consolidation move, what happened next? This is accumulation or consolidation, that's manipulation. Now it's going to distribute, but unfortunately it's already 5 p.m. so the distribution phase is still due. It took that liquidity traded into that 15 minutes first fair value gap, which is still a breakaway gap. Why? The first time it came, it kept the portion unfilled. The second time it didn't even come there. The third time it came, it still kept that portion unfilled. Okay, there is no body also inside that fair value, so it's completely, like, you can say it's still unfilled. So that's why price reacting there. That manipulation phase was to take the liquidity from these inducements. Now it's distributing, but unfortunately, as I'm saying, like, it's already 5 p.m. on New York, so the distribution phase I'm not expecting any time during the Asia session, and I don't really care about the distribution now since I'm done with my trade for the day. Okay, I tried, guys, I tried. Oh my god, I'm so sorry, guys, I'm so sorry, I really didn't realize that my chat screen is not on my OBS, like it's not mounted, so I didn't actually see all your comments. I'm so sorry, I forgot that my chat screen is not mounted with my OBS like this one. Okay, I pop it out, usually it's on my OBS, I didn't realize it's not here. So I'll quickly go through the comments, and I'm so sorry. Like Shan Khan, hi, good night, please tell me about BTC. Should I trade WFOR short? I don't know WFOR, week forward, maybe week forward. Okay, maybe week forward, I don't know WFOR, what is it? All long in Binance future. Guys, I'm here to teach you this ICT concept. Okay, to be honest, I'm not gonna tell you if you should go short or if you should go long or something like that. BTC, USDT, let me, Bitcoin, CME, BTC, USDT, I'm gonna mark the Binance only, and let me, Mr. A, I don't know what it, market is going sideways right now, wait for the confirmation, BTC may hit 46k to 48k level, very good, then go back to 32 to 31k level. Testify, can you go over a step by step of your silver bullet model? If you are still here, I'm not sure if you are still here, I already talked about it, but I will, as like maybe by tonight I will try to make a video just for the silver bullet model. Okay, because usually what I do, okay, as simple, I'm trading on a 1 minute time frame. Okay, I trade on a 1 minute time frame. The max I look into is a 1 hour time frame. Yes, I love 4 hour time frame, don't get me wrong, but the problem with 4 hour time frame is on the DXY the 4 hour time frame doesn't align with the time that is on the ES or NQ. I'm not sure if the construction workers sound is coming too hard or not, but please change your mouse cursor or make it big, cannot see your cursor again. Okay, this one is provided by TradingView, I don't know if I will be able to change it, or where is the pointer? Oh. Shit, man, this will give me a headache. I'll make it this far. Okay, I'm sorry, I cannot go any bigger than that. Oh my, how am I gonna look into my chart if I have this big of a mouse cursor? Okay, anyway, so what I'm saying here is the max I go for 1 hour. Let me go to ES today because that is where I was trading. Let me hide all that sheet over there because that's like pyramiding and other stuff. So 15 minutes, the max I go to 1 hour, but usually look into 15 minutes. I have the silver bullet starting from 2 p.m. okay. Today I took both the, like, I will tell you just a second. This is the 2 to 3 p.m. So during this 2 to 3 p.m. what I want to see is market, like especially on the 2 p.m. time. When this 2 p.m. is happening, I want to see market taking liquidity inside of a fair value gap. That is your fair value gap. You have these equal lows on the 15 minutes, like this one and this one, okay. These equal low, if you like, I just mark the fair value and the possible liquidity level before 2 p.m. Now in 1 minute what I want to see is market grabbing that liquidity, like this level. It's going higher, there was relative equal highs over there, and also this bearish fair value was yet to retest, okay. Retest means yes, this is a test, but I'm expecting market to go and grab this high and then react from that bearish fair value. Now forget about this fair value, since it has delivered its sell side delivery from here. Forget about that fair value, just keep in mind that market is going higher. This is your 15 minutes bullish fair value gap. It has already traded and taken all these liquidities already, okay. Now why I want to see this is your PM session silver bullet. So before the silver bullet, you want to see it has taken these three liquidity levels. What are they? Your Asia sessions low or sell side liquidity, or your London session sell side liquidity, or your New York AM session sell side liquidity. Now AM session sell side liquidity is not this far, it's until this far, okay. That's your 926. It started 930, candle happened, it went higher inside of that bearish fair value. Now it coming lower. There is your what it calls the new day opening gap range is also up there. So you can expect this sort of liquidity will be taken from that moment, since it didn't take that high, okay, the new day opening gap, that 930 high. That's very important. Why I'm saying this is because I took a long during that moment. That's why I'm looking for the sell sides only, if it has taken those sell side liquidities or not. Yes, it has taken all, like it has taken all the possible sell side liquidity around that area. Then it started going higher with, you see here, okay, there will be other, like before the silver bullet you will have some beautiful entry setups over here, not because I'm looking at it, but because I traded that and made 1400 plus profit on this day, okay. So it traded into that first fair value of the breakaway gap that I was anticipating on the 15 minutes here. It took all the liquidity from left, it started going up higher, but this is before my silver bullet, so I'm not focused here, I'm focused what is here during my silver bullet. Market created some equal lows. This is the silver bullet starting time, okay. This is the silver bullet starting time. I will just make it thicker and I will bro, I'm having a headache regarding that mouse cursor. You don't need to look into my mouse cursor. Fuck my luck, man. What the hell was that? Maybe that's the max I can make. Still it gonna give me headache. I will keep it like this, okay. So that is when market started coming lower. This is your sell side liquidity that market grabbed, okay, inside of your 15 minutes bullish fair value. That's what market did. When market started reacting from that 50% level, if you go to 15 minutes you will see only wick came to that, and that is only one candle's wick. That is your bullish fair value gap that I was talking about, okay. So it came with only just 1 week. Even if you go to 5 minutes you will find that it respected your 15 minutes fair value gap's midpoint. This is a very important level. This is your breakaway gap as well, because market is breaking away from that area and it didn't fill up completely. So for now I'm gonna mark it as my 15 minutes breakaway gap, but depending on what today, like this day does, I'm gonna use this fair value one more time or maybe 2 more times, I don't know, as long as it is not completely filled up. I'm just keeping it for my next day or something. I'm not willing to trade this week anymore, but let's see, because of all those newses from tomorrow, I'm not willing. But as you can see, like on 5 minutes it also respected that midpoint, it didn't fill up it completely. Now in 1 minute, what happened during that area? Market displaced. This is what displacement took like. This is what displacement looks like. Okay, you cannot expect some weeks after weeks after weeks and then you call it a displacement or market structure shift. Anyway, what I look into is it took the sell side liquidity, now it should deliver for the buy side liquidity if there is any clean or visible. If not, I simply target 1 to 2, as simple as that. Okay, if this is not giving me 1 to 2, I will go for 1 to 2 no matter what. When do you really qualify breakaway gap as a breakaway gap? Is it after 15 minutes candle close? Okay, so on the 15 minutes, okay, even in 1 minute, you see this is your 15 minutes breakaway gap. That's I'm talking about. The only thing you need to see is whatever the retracement into that fair value gap is, you need to have some portions unfilled. It cannot trade to the lower part. Doesn't matter 1 minute, 15 minute, 5 minute, I don't care. I don't want to see that it traded the entire area, entire fair value gap area. It left this part open. That's why from fair value I changed it to breakaway gap. It took that high, it has already delivered what it was supposed to deliver. Why this is the high I'm looking into? Because when market was going higher from this low, that's the highest point it reached before. Like, let me go to 15 minutes one more time. You see, like from here market went up there, then that is the only fair value market created during all these moves. There is a small little fair value here like this one, but I'm not too much into this fair value. Why? Because that's below my liquidity levels over here. The liquidity that it took, it's below that. If market goes here, it will be a reversal, possible reversal. You see this, it's falling, I think way below my OTZ. See, it's right below my OTZ, because 79% on Fibonacci retracement, that is bit scary. Okay, that is scary because you want to see price reacting from this is the like best possible area to price like come and retrace. If it goes to 79, yes, it's okay because of your order block, but you want to see market is retracing from the 6, 2 and 7 on level. That will be like less hectic trade. That's what I mean to say. It won't give me too much of pain in terms of going towards the move or in terms of getting the move you're anticipating. Now let me mark the fair value that I was anticipating. You see, where is that level? That is sitting right below that 50% level. So this is your discount area and that's the only fair value price created. Let me move it on to the left and right and let me remove all this. Okay, let me make it clear. So on 15 minutes, you see there is this portion open. Since this portion open, first thing first, why I was talking about like it has delivered what it was supposed to deliver. This is a fair value. I talked about it over and over again, but remember, this is the fair value. That's the high market created before coming to this fair value. When this high was created and you are anticipating that market will take this high, let's say your calculation, your bias, whatever you want to say, is going upward from this fair value. This is a bullish fair value. You are expecting market will now go higher. How far should you target? That's how far you should at least target. Okay, because if you are right about your analysis, the high it has created, it gonna go and grab that liquidity from that high. After that high, if there is anything else to look for, like this 15 minutes fair value, this swing high over here, these are relatively equal, relative equal and exact equal. Okay, relative equal is less possibility, exact equal is more possibility or high possibility. What price took from here? Exact equal. Now it created exact equal over here as well, but why I'm not worried about this exact equal yet? Because it still didn't deliver me my buy side one. Since it's respecting every time it's coming into this area, it's respecting my bullish fair value. It's coming inside of the bullish fair value, it's going above, coming inside, going up. Every time it's closing above that fair value. That's why I'm not expecting market to grab this liquidity one more time, but I'm expecting market to grab this. It has done its job. Now look into this. This is a bearish fair value. Market traded here. This is the first time market traded that bearish fair value. What was the low? This was the low. If you entered into a trade from here, you should take partial, at least some partial at this level. Then you will look for some other possible levels where market can go. Like there is your first or extreme fair value that was never retested. You can target that fair values high. From there you can extend it to that, if not this low. If since here, like here you see market didn't respect that. Okay, market it's respect, but I'm not gonna make it hard for you guys. This is also a respect, because the candle came lower, the immediate next candle went inside, then it started going higher. So this is a fake breakout, but I'm not gonna talk about this, because Monday it's accumulation day. You will see lot of fake moves over there. However, the one that I'm saying is this fair value gap was retested. When market came this low, it went higher, it tapped into that fair value. So that low will be what you will be looking into your take profit from, like take your profit from. So this low and this low are relatively equal. Okay, it's not exact equal, but it's relative equal. So this is very close to each other. If market can take this, it will take this. As simple as that. You don't need to make life harder for you. You can go for this liquidity. Now what ICT talked about liquidity is, but can some down and up, down and I don't rate it, but it can come down and close up the gap after a few candles, right? After a few candles. Okay, so first of all, it cannot, like this is a simple thing. This is a fair value gap. Like this fair value gap is acting as your support level. Market coming here, going up higher, that's what you are anticipating. Now if it goes here, I will simply name it as my fair value gap. I'm not gonna, like if it trades until the low of the fair value, like complete the fair value gap, I'm not gonna mark it as my breakaway. I'm gonna mark it as my regular fair value gap. There is another fair value that market created when coming higher from this fair value. Okay, it took the liquidity. Now I'm not gonna enter into this and one more time. Why? Because overall my market was bearish. Okay, so the move towards the sell side is better, or in your is gonna possibly go in your favor than the move towards the upside. But I'm trading this sort of things for a long time. That's why I know, like this is called inducement, and when price has to go and, like, you know, grab this sort of liquidity before going lower, because these people will be profitable. Whoever is entering in this sort of area, all of them will be profitable if market goes any lower from that area. Okay, from this fair value, if market comes lower, it will be giving profit to all those people. Market never gonna do that. Market will grab this sort of liquidity every time. I'm not saying this for the first time. Okay, I already talked about it. Why market started moving higher from here? This is the only visible swing low that you can see from all the way, like this bullish move. Market is bullish, right, for a long time. If you go to higher time frame, you will see bullish. Everywhere there is a low like that sitting inside of another low. You see, like it took all these liquidities, but specifically look into this low. It took this low, then came here, took all the relative equal lows from the left. Now it's going higher. This sort of lows are inducement, because that low and that low, this is relatively equal, market came, it took these relative equals as well, it went higher. But specifically when you will see this is in your 1 minute setup, you will see lot of like this. I'll show you here. I already talked about this, the 15 minutes fair value. I hope I answered it. Like, it cannot close the full gap. If it closes the full gap, it will be a simple fair value gap. Every gap is your fair value gap. Okay, like gap like this is a liquidity void. There was no trade around this area, that's why there is a gap like this. People calls it volume imbalance as well. This is also a fair value gap. Market, if market wants, it can come here and respect that area and go higher as well. There is nothing wrong with that. You see here, there is a small little fair value, right? Like, not small little, but the 1 minute fair value, it has a small little portion open. It's a breakaway gap for now. When market traded here, completed that, it took that liquidity, it started showing that rejection. Now this is not my breakaway gap anymore. Like, the next time if price comes here, am I gonna use this as a breakaway gap and expect that market gonna go higher? Definitely not. Definitely not. I'm not gonna use this and expect market to go higher. Instead, my 15 minutes bullish fair value, that one is still unfilled until this moment. So I can expect price to come lower than this, maybe fill it up completely, then go higher. And this is still a breakaway gap. The moment it gonna trade below that low, it will be my regular fair value gap, and once it delivers that, I'm not gonna use it. What I want you to understand is, would you enter at the CE of the 15 minutes fab, or would you first wait to see the fab shows rejection or not and then take an entry? I'm gonna see the rejection, brother. Why I'm not expecting a entry here? Okay, I'm not expecting a entry here. I saw market got rejected beautifully over there. You have a swing high over here, that market traded above and closed above. It created two fair value gaps. It disrespected your bearish fair value gap. The first fair value gap is your possible high probability entry, because from this low to that high, that is your OTZ as well. It's not just the premium and discount, it's your OTZ. If you look into your premium and discount arrays, this fair value gap sits right under your, like right inside of your premium discount area. You want to buy long when price is in your discount, that is your high probability. And in this case, I saw price is creating multiple relative equal highs, and it's the only fair value it had here. It has already taken that, and like all the liquidity, it had a small little fair value. There are some volume imbalances, but these candles violently went above that. Okay, it didn't give a damn to all this. There is a bearish order block, it didn't care that as well. It went straight above that level, the bearish order block level. It came until this far, it came lower, retraced to this, and that is also your 15 minutes upper portion. I hope you are getting my point, brother. What I'm saying here is, I didn't just enter from the middle point. You will not find any entry over there. Okay, executions, there is no entry here. Okay, what am I looking into? Oh shit, it got disconnected from trade over, that's why. The broker connection limit has been, what happened? I don't know what happened over here. Unfortunately, it's not allowing me to connect my trade. You will understand, like, I didn't enter here. I entered when market went above that high. Also, it went above that 15 minutes fair value. The thing is, during the silver bullet, okay, especially, like, this is my 2 p.m. candle. Market took the sell side liquidity, came into a 15 minutes fair value gap. Now sell side liquidity I'm marking here doesn't mean that's the only liquidity it took. It took this low as well. If you see here, that's your 1 minutes low and there is your 1 minutes breakaway gap. It took that liquidity as well, then started going up higher, and I said common areas are the one you should focus. That's your common area. Why you see this far from like the unfilled part of, fuck my luck, why did I even listen to my own brother? It's hard to see the cursor. Anyway, this is the unfilled fair value gap. Okay, unfilled part of the fair value, that's the only area that is common with your 15 minutes fair value. Market came to that area, it started rejecting from that area. Now again, when market was coming, it created this bullish fair value. See this bullish fair value, that is your common area with your 15 minutes. It retested that common area completely. I'm not saying this is gonna happen every time, but the common areas are the one you want to focus the most. Anyway, what I'm saying here is market went higher, gave me your market structure shift or break of structure around this level, because there is no other swing high inside of that area. Okay, there is no swing high here. That's the market structure shift. Now if you want to use this bearish fair value as your inversion fair value, I'm not gonna say that you can do that or you cannot do that, because inversion fair value is very controversial. Market didn't respect it. It didn't take the sell side liquidity of when it was trading here. When it went above that area, that was the high it created. The first time it came inside of that fair value gap, it didn't take that liquidity either. The second time it came, it didn't take that liquidity. But here you can see there is a volume imbalance. If there is no volume imbalance, price was still respecting that part of the fair value gap. That's a problem with trading ES nowadays, because it has lots of volume imbalances. Anyway, I'm not eager to trade here. I'm looking into this fair value because that is the first fair value after market has taken the liquidity from its left and gave me towards the bias that I'm looking into. I'm expecting market to go up higher, trade into those highs, because the 15 minutes fair value it's respecting, that is the highest level it went before coming and retesting that 15 minutes. So during my silver bullet, I was thinking about buy side liquidity will be taken now, and that's why this is my first bullish fair value gap where I entered into my trade. Okay, where was my stop loss? Right below this candle, because number 1, number 2, number 3, 3 candles that created the fair value gap. The third candle's low, in this case it was the low of the same level. Okay, so this was my stop loss. I think the first entry I put, yeah, so I put just 1 pip below that because of the mean threshold of the order block. Just because of that I put here like 1 pip below, just this much. Okay, other than that it's same. I think it's not even 1 pip, because that's 66 as well, so around this, no, 65, 75. Okay, so around this level, because the mean threshold was sitting right at that low, and then I let the market do its job. Now usually what I do from here, okay, that's my entry. Okay, from here I target one. Okay, let me just put the stop loss first. That's the stop loss. I target 1 to 2. What is the 1 to 2? This level. Now this level is aligning with these buy side liquidities. Although I'm expecting market to go there, I would go maximum to this high. Okay, why I'm saying this is because it's more than enough, brother. For every $100 you risk, you are getting $263. When I trade, I create a limit order. Let me go to paper trading to connect that. Okay, I think you will understand what I'm trying to say here. When I trade, I create a limit order. I just select my 1% risk. Okay, 1% is $500. In this case I have 89,000 over here on the paper trading. That's why it's $800 with $500. Okay, let me put $500. I can get, like, with every $100 I can get this, so around $500 is what I target. Why it's not calculating automatically? Fuck my luck. Anyway, 2.62 into 500. this is how much I can earn from one single one single trade. Okay, if I just target that high or even lower than that, my 1 to 2 is what I usually look into, and in this case I don't even need to go until that high for the 1 to 2. That's 1 to 2, that's $1,000 in profit straight away. This is why I don't need too much of the calculation regarding my silver bullet entries. But what I said here is, if my bias is telling me, okay, I should stop actually because of the construction workers, it's making too much noise. I'm sorry about that. I will come live again later, maybe tonight or day after tomorrow, something like that. I will try. So anyway, I was anticipating a move towards that fair value. That's why I looked into the sell side liquidity taken. Then after my silver bullet, this is the first bullish fair value that it created, that also aligns with the premium discount and the OTZ. Okay, you see that OTZ, that is where it is aligning, and that's where price is trading. And what I said about the 7.9, I don't want to see price coming lower than that. It did not come below that 7 on level. Okay, like just one tick, now it's going higher. This is what I'm expecting from a market. Now I could go for that high as well, because that's the highest level, or sorry, this is the highest level that price went before coming lower. This is something that you can use at your paper trading, or I don't know, like sorry, I mean funded account, or real, like your own money. Why I'm saying this is because when I was in this challenge, sorry, it's not the account anyway, when I was doing the challenge account, I will show you here. You see what it says: do not hit or exit $100 loss limit. But there is another one: your best day cannot be greater than 50% of your total profit. Why it is saying like this? Why my best day is cannot be 50% greater than 50%? I have to make $3,000 profit in one day. I cannot make over $1,500 in profit. That's why every time I trade, I try to make it around 1,400 or 1,300, something above 1,000 but below 1,500. But if it was my funded account, or if it was in my original account or live account, I would consider taking some partials at this level and leaving the rest for this, keeping my stop loss or moving my stop loss to break even. Maybe after, remember this, okay? Don't think this is where I got my break even hit. I said partial at this level, remember? So this level got hit when price went here. Okay, nothing came to that level before that. So once that level hit, my partial is in my pocket. After that I'm moving it to break even. So after hitting this, price never came back to my break even. So it eventually gave me what I anticipated, which was 1:5 risk to reward. As simple as that. I'm not gonna move my stop loss until I secure some profit first. Yes, like that's what you can see here. Why I have 1.82% of my break even trades, because the rest of my position that I'm leaving into break even, it's very rarely I'm doing that, because most of the time I'm taking my profit here. Now this, don't count this as like that way, because of this specific area it is showing me that I already talked about it. Overall I have over 80 something percent in what is it, 83.33% winning trade. You see that my winning trades 83, 5% is that, and losing trade is only 11.11%. Now think about it, that I had an accidental stop loss on the first day. I don't remember where it is. I had an accidental stop loss. Okay, the accidental means I had a, I think you are not here, that's why I'm saying it over again. Like I had a stop loss set there somewhere around this area, like buy stop, and I hit my take profit on my tab. I was trading on my Android tab. I went to bed, this buy stop was still sitting over there. When market came here, it gave me a buy long position, but market over the night market came lower, and whatever profit I made on the day, I lost all of them. And you see this $1000 threshold. This is a good thing about top step, which is, let's say you have a position opened, you don't know about it, the max it will lose is $1000, although in this case it took my $750 profit and $1055, I think, because of the volatility and fees as well. It took all this out. Okay, so from the account I lost $1055, but from my profit I lost all of it. So in this day I lost over $1800 just because I had a pending order left over there that I had to manually close like this. When I hit my take profit, I had to manually close like my stop loss. So that was a accidental thing that happened over here. After that, you see 100% win, 83.33% win. Now I'm not sure if TraderPath has updated, Top Step has updated yet or not. If it's still processing, okay, now you see I have completed my challenge. Congratulations, you have passed your trading combine account. You will this for next step. Anyway, you see that. Now you look into my trade. 1400 in profit, 1400 in profit, 1266, 1266, 1400, 1400. This one you already know what I meant. Win rate, top step, it says 78%. Why? Because you see all these trades, every time you hit a trailing stop loss, it counts as a trade. Every time you hit a partial take profit, it counts as a trade. That's why it's showing I have taken these many trades, but I took only 2 to 3 trades and then added to those positions like this. Okay, like some of the positions I tried to add some, what it calls, like pyramiding, dollar cost average in short. Okay, that sort of thing. So in silver bullet, what I look into is possible buy side and sell side liquidities. I want to see market grabbing that buy side, and inside of a 15 minutes or hourly, like the higher you can get it, it's even better, but you must have to wait until price reach and trade into that. In this case it traded straight like within the starting of the silver bullet. That's why my entry was higher. Don't think about this. It's actually on the paper trade I was teaching one of my younger brothers something. That's why it's showing something like 2 cents, 5 cents, this sort of things. Okay, don't worry about that. I was just showing someone how to use the market orders and market executions. That's why you will see something like that. Anyway, so that's what I expected during my silver bullet, that market will go higher and grab at least this high, not that high, but this high at least. That's why I entered into a long position. But since my account didn't need to go that far for my take profit, I just targeted that, and mostly I target 1:2. I don't wait until that far. Okay, so wherever the liquidity level is, wherever I can find my 1:2, I target that. This entry must have to happen inside of your silver bullet time, which is 2 to 3. Okay, let me go 2 to 3. Okay, this time frame, this is your PM session silver bullet. It must have to happen, the entry. Doesn't matter when you get your take profit. If it happens after, like, by the way, if by 4 PM you don't get your take profit, you close whatever profit you have, you close your position, because after 4 PM market will mostly go for consolidation, because that's when New York session starts to end. Okay, like that's the ending time of New York session. So by 4 PM, if you don't get your take profit hit, which you will get if you target simply the nearest liquidity or 1:2 risk to reward, you will get before even your silver bullet finishes. Let's see, like 1:2. You see here I got my take profit field here, so it's inside of my silver bullet. I don't even need to wait until that, but this is what I love. That's why I'm saying like 1:2. Anyway, but as I'm saying, if let's say this high was not taken by before 4 PM, you will close wherever the 4 PM candle is. Similarly, another thing can happen. Let's say this liquidity market took around this side, like right before your silver bullet, and then it started moving up from here. if the fair value gap is outside of your silver bullet here, like this fair value, let's say I'm bullish, that's why I'm referring to this fair value. If let's say the fair value gap was like this, okay, that's my silver bullet starting, fair value gap was this, you can still use this fair value in your silver bullet, because the entry needs to happen inside of your silver bullet. I hope you got the point. That's the PM session. Usually I don't trade PM session, to be honest. I just trade the London session and New York AM session. Now London session, the silver bullet, it didn't take the buy side liquidity, it took the sell side liquidity. I didn't get any like good entry setup over there to go towards the buy side, that's why I didn't enter here. The AM session silver bullet, like you can still anticipate your silver bullet, because if you watched ICT's time based liquidity level, you will understand. Why is 6 AM? Where is my today's AM session and PM session? That's 7 AM. Oh, okay, that's my quarterly liquidity. I'm sorry guys. 3 AM is here. Okay, now I know what I actually, sorry, 3 AM is here and 4 AM is here. Now I forgot actually, sorry, because this made me confused, and also I didn't sleep yet. So Asia sessions low was taken before your silver bullet, also some other areas over there. You go to 15 minutes, look for your possible this is your silver bullet, right? So look for your possible fair values here. There is nothing on 15 minutes, so go to 1 hour, not lower. I'm not gonna go lower. 1 hour, that's your silver bullet. You are looking for a possible entry or reversal point on your left, okay? That's your liquidity, hourly liquidity. Also your Asia sessions low are sitting somewhere here, okay? Why I'm saying this is your hourly liquidity, because you see those are all relatively or exact equal over there, and I'm looking into the only hourly bullish fair value. If I'm bullish, okay, look into this area. Now 15 minutes didn't give me anything, so hourly the midpoint can be a possible area where I could possibly look for a entry, or I would look on the smaller time frame that if there is anything else or not. So let me go to 1 minute and let's see if around this area I have any possible reversal point. You see 1 minute has a breakaway gap over here. Why this is a breakaway gap? You see this candle, it just tapped this much and then went higher and took the buy side liquidity from this high or other areas. So this is your breakaway gap that you can use, the thing that I just told you. You see that during that silver bullet, price came to the low of that breakaway, closed completely, it started going up higher, but I'm not focused into that. I need a fair value gap to enter, okay? If there is no fair value, I don't want to enter into a trade. As simple as that. So during your silver bullet, it took the low. I want to look for a long setup or long entries. So I cannot find any possible fair values over there. You have a fair value here. Until your silver bullet finishes, you didn't get any entry here. There is a fair value, a small little fair value, there is a fair value. Now if you entered on this fair value, like when this candle closed and that candle opened straight away, that's not a good entry, to be honest. But if you didn't enter anywhere here, market execution, things like that, then by the time silver bullet finish, you didn't get your entry. That's why you don't have any entry. I'm not gonna say this is a fair value that market retested. No, this fair value is way higher, it's sitting way higher, okay? That's why I'm not entering or looking into a trade here, because from this move until that fair value, okay, you see that OTG, let me go to the 50%, that's your 50% level. So the entry could have been somewhere around this fair value or other fair value, that is I just marked. I'm not going for a buy long that is above my, like that is in premium already. Yes, in this term it delivered somewhat around this level, but is that a good area to enter? How do you know that price is not gonna come to this fair value or even lower for this fair value retest? That's why I'm saying I didn't get a possible entry over here. I hope you got my point. Like from 2 to 3 I need to sorry, 3 to 4 I need to enter into a market inside of that. During the London session I didn't get a entry like the fair value for the bullish move because it took the Asia session low and it's currently inside of a hourly bullish fair value and a 1 minutes breakaway gap. During that moment, like this moment, I was looking for a buy long towards the Asia session high wherever I can target the nearest. If it gives me 1 to 2 I'm good with that. If not, I'm gonna target the 1 to 2. If I entered like got my entry here or even on that fair value, a stop loss, let's say I put 2 for here. Usually you want to put it at the third candle of your fair value gap, like either way the fair value gap's third candle, and then you want to target your 1 to 2. That's your 1 to 2 field, but that's your nearest exact equal high. There are some relative equal highs. Price took all of them, so I don't know like how far you wanted to go or how greedy you wanted to be. Like that's how far it went. So I'm not willing to take 3.23 or anything. Maybe these equal highs could have been more than enough for me, or simply what I target is 1 to 2. That could have been if market gave me entry over here. Okay, there was no entry for me. Lots of fair value, but I didn't get my order filled inside of my silver bullet, and later when market came lower it respected that fair value one more time, or you can call the order block respect, the mean threshold of the order block also, but it did not respect this fair value. Okay, it came lower, it came higher, traded that fair value, came lower, it didn't grab that equal low over here. You see, it again went up above that fair value, came lower, grabbed no sell side liquidity, went above. It's just doing that. So this fair value was completely like out of the scene for the whole time, for the entire time. But if it was in the scene or in the trade during my silver bullet, this could have been a very high probability fair value gap. Anyway, I hope you got my fair value gap point. So yes, it's a very long time, so I want to finish now. Okay, until next time, take care, bye bye.